Trade this morning, Tom.
Nissan and Honda will be putting in place a holding
I will show
company
you how to get the best funding for your
2026. Honda will be nominating a majority of directors to that joint holding company. There's a story we keep across for you, of course. Novo Nordisk, meanwhile, in focus, of course, given the rout of Friday. Automakers as well on back of what's happening with VW and an agreement with Labour and unions and Aviva on that deal. Guy.
Okay, here we go. Monday's opening trade. Tom, let's talk you through what we're seeing in terms of the price action. I think it's going to be a single stock story, single stock news flow story this morning when it comes to what these markets are delivering. I think at an index level, you're not going to see a great deal. Maybe a little bit of softness. You're already getting an indication going through of that in the FTSE 100. The Stock 600 is absolutely flat. The IBEX down just a touch, but only a touch. Not really that much price action at an index level. Below that, though, you're going to see some interesting stock stories. So the DAX is going to be an interesting trade this morning. We are expecting upside in Volkswagen. Let's see what that delivers. The CAC is already giving back a little bit of ground. We're down by 0.2%. Is there a read across into the Danish market, which is closed tomorrow, in Novo as well? Lots to look out for this morning. Tom, what's going on below the index surface?
Novo repairing some of the damage of Friday, nowhere near all of it, but you are seeing gains now. It's the top performing stock right now. Novo Nordisk up 4.4% after the rout, of course, on Friday. When it comes to what is happening with the deal-making space, Aviva, of course, agreeing to that more than £3 billion takeover of Direct Line, you're seeing losses of around 0.6%. So we're not a huge move for Aviva. We look, of course, at VW, given it has come through with that agreement, at least for now. We'll see if that sticks around the labour unions and not needing to close some of those factories. In terms of the sectors, sector by sector, in terms of the top performance, it is coming through from healthcare. That is the Novo story, up 0.8%. You've just got three sectors so far in positive territory. Banks up 0.3%. On the downside, travel and leisure dropping 1%.
So Novo Nordisk is still down. If you look at the two-day chart, is still down by 20%. So it is gaining this morning. We're up by 5.5%, 5.6%, but that stock is still down by circa 20% on a two-day basis. So when you see that stock bounce this morning, we are not filling the gap that was generated on Friday, which is really worth bearing in mind. We're also watching what is happening with Volkswagen this morning. I'm waiting to see a trade on that stock, so we'll see how that comes through. Talking of auto news, I want to take you to what is happening in Tokyo right now. As you can see, the press conference that we've been anticipating all morning has just begun. We've got Nissan, Honda, and Mitsubishi all behind podiums today, senior executives briefing the press on the details of the deal that will be done. This is just the starting almost of that process in terms of what is going to be happening. But it looks like we are ultimately, Tom, heading towards some sort of a holding company that will house all of these three companies. But it looks like Honda's going to be in charge of this process.
We know they have, of course, in terms of the market cap, the power lies with Honda. Let's listen in to those executives as they speak there at that press conference.
To begin discussion on its potential participation in the business integration talks and to make a decision around the end of January 2025. Given the necessity of exchanging confidential information, we signed an MOU, which is an agreement to start the discussion and provides a framework for the discussion. It does not mean that business integration is decided. Nissan and Honda will start the discussion from today onwards with an aim to clarify the direction of the possibility of business integration by around the end of January, when Mitsubishi Motors is expected to make up its mind. Today, I would like to walk you through the contents of the MOU and the next steps. Later, I will ask CEO Uchida-san and CEO Kato-san to share with you their thoughts on the latest agreement. As you may remember, Nissan and Honda announced to begin a feasibility study of a strategic partnership back in March.
Okay, you're listening to obviously the dubbed voice of the Nissan president, the Honda president, walking us through the details of the agreement that has been signed. We're going to continue to monitor what is happening here. Craig Trudell is going to be joining us very shortly, who leads our auto coverage globally, giving us a take on what is happening and the results ultimately of this deal for the global auto sector and what it's going to mean and how necessary this deal is maybe to stabilize particularly Nissan. But we're also looking at what is happening with Volkswagen this morning. I'm still waiting to see exactly what is happening. We've got some trade now coming through for Volkswagen in terms of its share price. It's only up by 0.5%. So we're not. Initially, I thought that we were going to be seeing maybe Volkswagen responding a little bit more positively to the news of this agreement that we saw Friday with the unions. But initially, we get a gap. We got to move higher, but then that's faded really, really quickly. And it does seem as if the analysts are quite mixed in terms of their response. Some saying actually this is a good first step. Others saying actually this doesn't achieve the objectives that Volkswagen needs to achieve in order to stabilize its business.
Well, the cost savings, primarily, that Volkswagen executives suggested they needed with that dramatic prospect of up to 3 factories being closed. That seems now to have faded as a likelihood, but there is likely and possibly a cost to keeping the unions on board. So you have some more certainty in terms of the prospects of VW, at least in the short to medium term. The longer term questions, of course, remain for that company. And we have some analyst views as well on this. But so far, as you say, not huge moves coming through for VW. Novo, I know, has been front and centre for you and for the markets and investors in Europe. Novo Nordisk shares, they're up this morning, but as Guy was pointing out, of course, not making up the dramatic losses of Friday. The details, of course, were around this experimental obesity shot that they put so much hope in, CagriSema, which did help patients to lose weight, but not as much as executives had flagged originally. So 20.4% of their weight was lost over 68 weeks, short of the 25% that the Danish drug maker had repeatedly predicted. It is, of course, Europe's biggest company by market cap, and it looks to set to end the year in the red, despite the gains that we're seeing today. Son of Us is in Copenhagen, following the story for us very closely indeed. Sana, where does Novo stand at this point?
Yeah, well, as you saw on Friday, there was a $120 billion loss to its market value in a very short amount of time. A bit of that share of the stock did recover on Friday, and you're seeing it up now again this morning. But as you said, not nearly enough to recover those losses from Friday. Novo Nordisk is really counting on this new drug, CagriSema, to position itself as a leader in the market for weight loss drugs. And the trial results on Friday, well, they really just disappointed investors. And the problem for Novo was that it had promised too much. It had told investors ahead of time that CagriSema could deliver 25% weight loss, and it fell short of that, and it was punished for that.
What is the view in Denmark now of this company? How much criticism is there around CagriSema? What does Novo do next? Like this, as you say, management really raised expectations and clearly raised them too high. And you're now going to see a huge ripple effect coming off a huge move lower in the stock. These are billions of dollars worth of market cap that are being lost. For many people in Denmark, that is going to be a serious undertaking. Many funds, many people's pensions are going to be invested in this stock. How much criticism is management under right now?
Yeah, I mean, certainly as a Dane on Friday, it was very scary to see how much of a hit the Novo share took in such short amount of time. And we would have, every Dane would have felt it on the pension funds, on their investment portfolio. The krona also weakened a bit. Novo Nordisk, well, they are still encouraged by these results. I mean, after all, we did still see a more than 20% weight loss. And they still intend to bring the drug to market market in 2026. And I think we're still waiting from some details that Novo said they would release next year around, for example, one thing Novo, they allowed patients to remain on a lower dose of the drug if they wanted to, and a lot of patients did that, and we're kind of awaiting answers to why did patients choose to remain on lower doses. Was that because of side effects? Or was it potentially because they were very happy with the weight loss that they were seeing? And so some of those details will emerge later on, and they'll be very important in kind of the assessment of the future of this drug and Novo's future pipeline.
Tony, thanks for the update. It's still a big story this Monday morning. We greatly appreciate the latest. None of us joining us out of Copenhagen on what is happening with Novo. Is Novo a warning? Is it a wider warning that we all need to pay attention to? Expectations in a number of key sectors are being raised right now. Charles-Henri Monchard, Chief Investment Officer at Seas Group, joining us now. Good morning. Is Novo Nordisk a pre-shock that the market needs to pay attention to when we think about some of these AI names that we've been watching move up and up and up? Expectations that we've just been hearing got raised by Novo's management as to what was possible, and any disappointment has been severely punished. Is this something that we should be thinking about when it comes to other big names? Like, is this an NVIDIA story as well?
Well, it's a fair point. Obviously, it's a very specific story, but as you rightly pointed out, expectations were quite high. The stock was super extended. It is a major holdings in so many portfolios. So when there are, let's say, a bad surprise coming in, the punishment is quite big indeed, with more than almost 1 billion market cap being wiped out. So let's see. This is one of the, let's say, negative surprises that could come next year. For instance, with the Max 7, can they move from Max 7 to LAX 7? If there are any type of any similar type of disappointment coming, yes, this is the case with most stocks which are indeed overextended and owned by almost all investors.
So potentially the Mag 7 to the Lag 7. Charles, in terms of how that transforms, then where is the if you're investing, if you're rolling out a Mag 7 in 2025, where is that being put to play? And is it your sense that we've seen some kind of complacency then in terms of the stretch valuations of some of these stocks?
Well, there is kind of normal complacency in the sense that if you look at earnings growth next year, these Max 7, they are expected to grow twice the market rate, so between 15 and 20% EPS growth rates, whereas the rest of the markets will barely grow double digit. That's one point. The other point is also what is happening in terms of net supply. These stocks, they are buying back shares, at a very aggressive pace, which means that the net supply of these large cap in the US is negative. There are more share buybacks than share issuance or IPOs, and this explains why also the PEs are quite extended. So yes, there is maybe over exaggeration in terms of expectations. There is a high concentration of these stocks in all investors' portfolios, but on the other hand, the fundamentals still seems to validate the case that we need to own that kind of stocks in portfolios.
Well, where the PEs are not looking stretched, if you strip out Novo, are European stocks. What gets Europe back into the portfolio in 2025? Is it ECB? The fundamentals start to improve?
I think one of the, let's say, unexpected trigger could be some kind of, let's say, positive political outcome that we are not seeing. Would it be in France or Germany? We have seen over the weekends there are still a lot of bad news, which means that we are not going to see the kind of fiscal stimulus which is eagerly expected by most investors. And as you mentioned, that means that all of the positives are on the ECB shoulders. When it comes to the markets, yes, with the let's say if you strip out some of these mega cap, which are indeed quite lofty in terms of valuation, the rest of the market is quite cheap. But we definitely lack, kind of catalyst.
Is France investable until we get to presidential elections? Are we just going to continue to see the kind of volatility we're seeing? Another government potentially being formed before Christmas? We wonder how long it's going to last.
Well, you know, it's full of great companies which can become great stocks, but it's kind of, let's say, crazy that we don't see, let's say, any positive news flow coming on the political side. You know, some government was expected at the end of the weekend. We still don't see it. And what can happen is, let's say, again, a new government coming after Easter, because this one doesn't seem to be lasting more than 3 or 4 months. So a kind of big political crisis could be expected in 2025 in France.
Do you think we need to see early presidential elections? Would that clear the air?
It's possible. That's a possibility for 2025 indeed.
Political instability just seems like it's going to be a theme, though. How should investors be thinking? How are you thinking about the volatility that Donald Trump is going to be creating for markets? He's not even president yet, and we're seeing this volatility being created all around the world. In terms of investors' ability to take on risk in 2025, is Trump going to limit that?
That's a very interesting point, because for the time being, the political uncertainty is not seen in the US, it's seen outside the US, in Europe, for instance. But we have seen some very interesting news over the weekend that can indeed create some waves in 2025 coming from Trump administration. One is Panama, for instance. What is going to happen now with the Panama Canal? Then we have seen some comments about Mexico. So we can see that Donald Trump is probably going to be eager to put his stamp on the rest of the world when it comes to geopolitical leadership, and that indeed can create some waves, not only on US assets, but also, for instance, on emerging market assets.
I can't let you go, Charles-Henri, without so you've mapped out some predictions, some more likely than others for 2025. Look, we'll let you get back to that mountain view in a second. But one of your views, low probability, but you've got it out. It's here in black and white. Elon Musk and Giorgia Meloni get married.
Yeah, we have seen that was more than a joke, but we know that they are quite close. And the rest of the surprise was that because of this, let's say, a close relationship, Trump and Musk might start to move from best friend forever to foes. And interestingly, over the weekend, we have seen some comments from Donald Trump saying that Elon Musk is not going to be the president, that he cannot be, he doesn't qualify, by the way, for US presidency. So maybe that could be the early innings of some kind of tensions between the two. Let's see.
Yeah, he talked about a hoax. Charles, thank you very much indeed. Charles-Henri Monchal, Chief Investment Officer at Seas Group. Thank you very much indeed. Have a great holiday in the mountains. The Core 6 looks like this. This is what the story looks like. Clearly, we are watching what is happening on the left-hand side of the screen. As you can see, Novo Nordisk is rising quite sharply. It is up, but still hasn't filled the gap from Friday. Elsewhere, it is a sea of red out there. European markets going nowhere in a hurry. Let's talk about some of those other single moves. We've got Novo, but there's a kind of feed off that story, and Joe Easton's here with the details of it.
So as you say, Guy, Novo is a key focus today. That stock gaining around 7% over in Copenhagen. That is actually the biggest move for that stock since March, so around 9 or 10 months, but still down 15% on a 2-day basis in terms of that massive drop we saw on Friday. Some of the suppliers coming back up. Gerresheimer was down around 9% on Friday, a maker of syringes that are used in Novo obesity drugs, seeing a little bit of a gain in some of those stocks, but still all of those sharply lower on a 2-day basis. Then in terms of insurers, Direct Line are getting a boost. A 275 pence takeover agreement is announced with Aviva. That stock coming up around 3%. But what's interesting for me is it still trades massively below that. We're still 25 pence below the takeover price, and not much of a reaction in Aviva, potentially suggesting a bit of execution risk in that one today. Then in terms of gambling, wanted to bring you Evolution Gaming. Now this one is over in Stockholm, but they've got a big UK operation, and the UK Gambling Commission saying that they are reviewing the company's operations because some of their games have been accessed via Maltese operations that haven't got UK licenses. The company has spoken to our reporter on the phone a few moments ago and said that they are cooperating with this, taking it very seriously, but we can see a drop in that stock. 8% is declining, the worst performer on the stock 600 this morning. Then in terms of autos, we've got this exciting news around the M&A in terms of Honda and also Nissan. So that one is a little bit weaker, in fact, but we're seeing those headlines continuing to break. And Volkswagen, meanwhile, slipping a little bit after that union agreement, potentially not as much cost savings as expected, according to some analysts, but it is a step forward with that union agreement coming through. Then one sector I wanted to check in on today, excuse me, we're going to do Energas. That's completely my fault, not the producers, but Energas declining. They have actually done an agreement with the Peruvian government on a bit of a legal dispute, and that one is coming down 3%. Analysts said they were expecting a bigger payout for Energas. It's over in Spain. It's an energy company, a bit of a Peruvian disappoint hitting the stock at the moment. But the sector I wanted to bring you before I jumped the gun there was defence, because there's a story in the Financial Times saying Donald Trump wants to push NATO defence spending up to 5% of GDP for every country involved. And traders telling me in my IB this morning that's why this sector is higher today. Saab is gaining, Rheinmetall in Germany, Kongsberg, Leonardo, all of those stocks among the best performers today following reports around NATO defence spending. That's a green sector amid that sea of red that you mentioned a moment ago, Guy.
So great stuff. Thank you very much indeed. Yeah, that 5% story, maybe just an opening gambit, but it would certainly imply significant spending coming through from European NATO members. I want to take you back to what's happening in Tokyo. The Mitsubishi CEO is currently giving his views on the potential merger that his business would be involved in between Honda, Nissan and Mitsubishi. So this is the Mitsubishi president that is currently speaking. We'll keep you up to speed with what is happening out in Tokyo with this news that is coming through surrounding this merger. What I think is fascinating as well is that Volkswagen this morning has not responded positively to the news of the deal with unions. In fact, going exactly the opposite way. We'll come back to the auto sector in just a moment and give you the details of what is happening and the global implications of all of it. That's next. This is Bloomberg.
As it provides a source of our competitiveness for the future. The scale of this...
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close.
Welcome to Balance of Power.
This is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Welcome back. You're looking at live pictures out of Tokyo. Executives from Nissan, Honda and Mitsubishi giving details on this memorandum of understanding that has been signed by and between Nissan and Honda, with the expectation that they will build a merger between the two businesses, waiting for more details from Mitsubishi, but the expectation is they will have made that agreement by June of 2025. That's the time frame they're setting themselves, and then they will have a holding company that will be listed in 2026. Let's bring in with more details now on this major auto story. It would create the third largest automaker globally. Craig Trudell, our global autos editor, of course. Craig, from what we've learned in the last 30 minutes or so, how significant is this? What for you is standing out from this apparent deal at this point?
Well, I think one of the things I've always been told at Bloomberg is there's no such thing as a merger, right? Someone's buying somebody, somebody's taking over, and somebody's getting taken over. I think in this case, you know, the writing has been on the wall that this is really a Honda rescue of Nissan, right? And so you're seeing some of that come through in terms of who's going to pick the directors of this holding company. You know, Honda sort of asserting itself going into this, buying back a significant chunk of its shares. I think one of the things we're going to be sort of all ears for is exactly, you know, what Nissan has to say about, you know, sort of negotiating some of the particulars around, you know, the complexities of their shareholding structure. You know, what is Renault's next move going to be, and you know, how exactly you know, they fit in this future. I think the likelihood is that they will view this as an exit plan for them for that.
When I came in this morning, it was expected that Volkswagen was going to be trading about 3% higher on the back of the union deal we saw Friday. It's not. Why is it not? Like, what is it the market doesn't like here?
I think when you you know, follow this going back, you know, months now, this was a management team that was talking about, you know, the need to maybe close up to 3 plants in Germany. The VW brand, as we know, for decades really has been you know, structurally unsound, a really low margin business if it's making money at all. I think, you know, when you sort of go through this, you know, pitch battle to bring those costs down and get to a place where you can be much more competitive in an increasingly difficult environment, and then you have to pull all the way back from, you know, maybe 3 plant closings to 0. Yeah. I think the market's going to be sort of underwhelmed by that. And, you know, the management team on Friday pointed to, you know, technical capacity cuts, significant job numbers going away by 2030. But, you know, how many of those were always going to go away? You know, this is a workforce that is a little bit, you know, on the higher end in terms of average age. And so, you know, the amount of capacity reduction there isn't what was hoped.
Great stuff. Thank you very much indeed. Our Global Autos editor, Craig Trudell. Lots going on in that space. We're going to be talking about geopolitical stories next. We're going to fold it all into the European economy. That's the conversation that is coming up. These are the European stock stories. This is Bloomberg.
Why does this business model work? Because it's virgin space. It's never been done before, and it'll never be done again. When you step back and you look at something that's been golf, through institutions has been the way it has been for 53 years without change. In 1993, I stepped back and said, okay, this is not right. It's doing the same old Groundhog Day. Everything's the same. Players are a pass-through entity. They're not getting any equity built in their day. Once they're done playing, they're out. I thought, that's just not right. When you have to build a sustainable model, you need to have these players, these famous, the world best, the best of the best. You need to give them equity into the future. You need to give them a vision of where they need to go and how they're going to get there.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Welcome back. 8:30 in London. We're 30 minutes into the opening trade. Let's talk about where we are with European equity markets. A little softer maybe than we would have anticipated at the get-go when I first got in this morning. There's a couple of factors behind that. You are certainly seeing Volkswagen a little bit weaker than anticipated. You are getting a bounce back in Novo, but hasn't filled the gap yet with the losses we saw Friday. So all of that needs to be factored into your thinking as well. Plus, yeah, it's 2 days to Christmas. I mean, that's probably a factor as well. Talking of Christmas, we still don't have a French government. The expectation was that we were going to be having it last night. It hasn't happened. So the French Prime Minister, who we do know, François Bayrou, running out of time, to be honest, to meet his self-imposed deadline to name this new cabinet, a cabinet that we hope, or he hopes, will survive a vote of no confidence were we to see one in Parliament. So the new government's top priority, apparently crafting a 2025 budget, Bayrou aiming to finalise that by mid-February. But are we going to get this deal done? Are we going to see the contours of this government by Christmas Eve, which is now the new deadline that we're watching out for? Claudia Cohen in Paris joining us now. Claudia, what's the hold-up?
Hi. So the government announcement was supposed to be yesterday as Macron and French Prime Minister Bayrou met 2 times on Sunday. But now we know that there won't be an announcement before 6 p.m. tonight, as we should recall that today is actually a national mourning day for the victim of the cyclone in Mayotte. So the Elysee has said that it won't be before tonight. So basically, it's either tonight or it would have to be tomorrow.
Okay, so we look at the time frame. Maybe tonight, maybe tomorrow, in terms of getting the new cabinet. What else are you watching for in kind of the days ahead? What is that cabinet likely to look like? What are the priorities for Bayrou? This has to be a cabinet that's resilient.
Yeah, exactly. So what we know now, it's probably the government will have a lot of Macronist veterans, so a few ministers should actually stay. And then obviously one of the biggest challenge for Bayrou is trying to find a minister from other parties. So what we know from the French press today is that probably there would be like a former socialist MP that could enter the government. and a lot of obviously right-wing old MPs also that could enter the government. So it will be a tricky one to make a government more diverse as it was from like the previous prime minister. And also, obviously, the biggest challenging is to succeed to draft a new budget, because all the markets are waiting for this new budget. And I would say that one of another challenges would be to, listen to what businesses have to say.
You talk to a lot of people about what is happening here. Is there an expectation that this government can last more than a few months? What are people saying in Paris about how long before we need to be going through this again? Is this a long-lasting government, a government that gets us to presidential elections, or not?
Well, to be fair, there is not a lot of trust in that, because, as you mentioned before, like the government could face a no-confidence vote as early as mid-January, and the question is really tricky, for Bayrou, because first he needs to try to stop the widening public deficit. But how will he do that? Because the Marine Le Pen's party is expecting Bayrou to make some change to the pensions reform, but the pension reform was voted to in order to close the widening deficit. And then businesses are saying, look, you shouldn't impose more taxes on us, because it's already quite overwhelming in France. So the question now would be, where would he find the money, and how would he please the socialists, but also Marine Le Pen's party? So I wouldn't say that French people have a lot of confidence in the new government, and I would say, to be honest, that there is not a lot of hope and not a lot of care also.
Okay, Bloomberg's Claudia Cohen in Paris as we watch potentially for the details around that new cabinet, potentially later today, potentially tomorrow. Still waiting for the details, of course, and the key priorities that face that incoming cabinet over in France. Claudia, thank you. Let's get more details in terms of how to think about the political risks for the markets into 2025, and bring in Carsten Brzezinski, Global Head of Macro at ING Research. Carsten, great to have you. Thanks for joining us. Let's start on France then. Do you want to be positioning for more political uncertainty in France? How much risk is priced into French assets at this point?
Well, I think you definitely want to be positioned for more uncertainty, because this is a political game of chicken currently. And even if we get a government now before Christmas, I cannot see that this is a long-lasting government, given the political situation that we have in France. So I would really think that we are heading to new parliamentarian elections next summer after this 12-month deadline, which also means that until then, we're going to have a lot of political uncertainty in France, but also means very little policy certainty, and the second largest economy of the Eurozone probably falling into stagnation.
In terms of just that timeline that you're talking about, does another parliamentary election resolve the impasse that France faces, or ultimately do we need to see presidential elections for that to happen?
Well, it depends, Guy, because it means that Macron would get a second chance to more or less redo what he tried to do with this year's elections, namely to get a majority behind him. So I think if we were heading to new elections in the summer, we have two options. Either the French decide to actually back Macron, and then we would have really certainly a quiet period until the presidential elections. If Macron would lose his majority for a second time next summer, this would obviously mean that I think earlier presidential elections would also be on the radar screen, and also a continuation of political and policy uncertainty in France.
What about Germany, Carsten? Are we underestimating the ability for the CDU, CSU, if they do, of course, win in the elections at the end of February? They'll have to form some form of coalition. That's the expectation. Are we underestimating the ability for them actually to be flexible on the debt brake?
Well, very interesting. We had the Minister of Finance, Cookies, over the weekend. Well, he's from the Social Democrats, talking to newspapers, saying that a reform of the debt brake was highly urgent. So I'm still thinking that we will get some changes to the debt brake after the elections. And whether it is outright reform of the debt brake, or whether it just means, some more flexibility, maybe some special purpose vehicles, it doesn't really matter. Because I think we now see a growing consensus across the political parties in Germany that there is a high need, there is a high urgency to invest more. And this won't be big time spending, but this really will be more positive fiscal stimulus in the second half of 25 and then also in 26.
How much of that is going to be a reaction then to the pressure coming through from the Trump administration? To what extent is this a theme more broadly across Europe? We talk about the targets around NATO, but the ability for governments to fund those targets in 2025, is this where the rubber's going to hit the road?
I think this is what the French and the German examples are nicely illustrating currently. So there is a big need for investment. There is, when you look at society and people, very little appetite for austerity and for cutting expenditures. At the same time, you mentioned defense. I would also add infrastructure, digitalization, education. So there's a long list of investment needs across Europe. And we only have one country which really has enormous fiscal space, and that is Germany. So what I would expect for 2025 is first a couple of months with policy and political uncertainty, because we really need to wait until we have the results and the formation of the next German government. But then in the second half of 25, hopefully a rebound with fiscal stimulus coming out of Germany, and the rest of Europe would benefit from it as well.
Carsten, we're looking at defense stocks on the screen right now. They're all up on the expectation that Donald Trump is going to push through a mandate that is 5% of GDP to be spent on defense. How realistic is that? Can Europe afford 5% if it wants to fund social security, if it wants to fund infrastructure? Can we do 5% as well?
Well, I think everything is possible, Guy. I think how this could play out in the end is either we're going to get some kind of European defense fund, so common European borrowing to pay for defense funding. That is clearly one. The other thing is that the European Commission gives a bit more flexibility when it comes to the fiscal rules and will exclude defense spending from the European fiscal rules. The other question I think Europe should ask itself, even if they were to go for 5% of GDP on defense spending, do they actually have the production capacities? And the answer is no. Now, from the defense spending we had already this year and last year, I think 70% of European defense spending did not go to the European defense industry, but did go to the US.
So we need to do that domestically. But in terms of the priorities, where do you think defense sits? Is defense more important than the green transition? Is defense more important than social security spending? Is it a zero-sum game? You kind of imply that maybe it isn't, that there's greater flexibility around borrowing. But I wonder whether actually the markets will tolerate that from countries that are already running significant debt-to-GDP ratios, north of 100% for a number of countries. Are we okay with that from a market perspective?
That's correct, and this is the biggest argument in favor of doing this at the European level. When you look at the entire Eurozone, and the entire Eurozone debt to GDP ratio is still below 100% of GDP. So this is clearly less than in the US. But we do have a couple of countries where debt levels are above 100% of GDP. So clearly, if we had to step up spending, and I cannot see that it will come at the cost of social spending, in all honesty. So this means some kind of European solution. This means some kind of European defense fund. Never, as we know, Europe will never come with a big bang, but probably some kind of transitional period to move into a European defense fund. And at the same time, try to combine a little bit of austerity with more investment spending. And I could see also more flexibility from Brussels coming to show that countries are allowed to at least increase their investment in infrastructure, because that would be a nice specific target for investment and no government consumption.
Okay, so possibly some flexibility from Brussels, possibly from more spending from Germany and any new government there after February. When it comes to the UK, we've had some reminders today, Carsten, of the fragility and the challenges around the growth picture of the UK, despite the pledges, of course, of the Chancellor, Rachel Reeves, to get us growing. Is the BOE, with its caution, setting itself up for a policy mistake?
Too early to tell, in all honesty. I think what the BOE did now is more as to follow at least the thinking that Fed and also an ECB are seeing, namely that there is still a significant inflation risk left in the economy. So therefore, they decided to take it a bit more easy. Does it mean that they can, withstand with no further rate cuts? I doubt it, because if the European economy, what I would expect, really goes into further stagnation, especially in the first half of next year, if the US will really engage in the modern version of industrial policies, so I cannot see how the UK economy could really escape this dance and would also start to slow down. If this is going to happen, the BOE would quickly pick up the pace in terms of rate cuts again.
What about the ECB? Are you comfortable with where the ECB is right now?
I would have liked them to do more in December, in all honesty, because I think we saw that in fall, the ECB tried to get ahead of the curve. Trying to get ahead of the curve also means they could have done 50 basis points in December. Inflation currently is not an issue. I'm a bit worried that the ECB is still too optimistic with its own growth outlook. And once we see that growth does not do what the ECB currently expects it to do in the coming month and quarters, I see the ECB really cutting interest rates further and at least see them going to 2%, probably slightly below by the summer of 25.
Carsten, great to catch up. Have a happy holiday. We always appreciate your time. Thank you very much indeed for sharing some of it with us this morning. Carsten Bretsky, Global Head of Macro, joining us from ING. I want to take you back to Tokyo. Quick look at what is happening there. We have this ongoing press conference between Honda, Nissan and Mitsubishi. The current lines that we're watching coming out right now, and this is the Honda CEO that's speaking. These brands will continue to coexist, he is making clear. Honda and Nissan to continue to coexist. They will develop brands equally, though, the brands equally. But it will be a Honda-nominated director to helm the joint company. Tom, it was interesting. We were talking to Craig Trudell a few moments ago. He was saying one of the lessons you learn at Bloomberg is there's no such thing as a merger. Somebody's always taking over somebody, and in this case, it feels like it's Honda taking over Nissan.
Honda has the clout in this relationship, and we're speaking, of course, about the board positions that Honda's going to be having. So they're going to have that leverage, it seems, on this board of this holding company that, again, they expect to be taking form from June of this year before listing in 2026. The role of Renault as well was interesting, given that it has a 35-36% stake still in Nissan, and how it looks to unravel some of that. Some of that stake held in a separate entity, some of it even wind down.
One factor we haven't talked about is Honheim. So there was some talk of Honheim potentially, Foxconn being involved in this process and maybe looking to take out Nissan. You wonder why that would happen, but you do wonder whether there's a role, once this process has unfolded, maybe even before that, for that to be put into the mix as well. Maybe some third-party manufacturing, thinking about how the software is going to work, thinking about how some of the technology is going to work. You do wonder whether this is the complete article here, and whether there is actually others that could join in to this deal.
And Honheim Foxconn said, look, they're going to sit it out for now and see how things shape up until June. But you're right. Look, this was a company that had aspirations at one point to build the Apple car, and there was all sorts of reporting around that. Now it seems they were looking, at least continue to look at Nissan, though they're staying on the sidelines. So Foxconn and Honheim's aspirations in terms of building out a platform for autos as they become increasingly electrified is pretty interesting development to watch as well.
So we'll watch that and see how that development plays out too. So there's a lot going on here, and it does feel as if there's a lot of kind of details that ultimately need to be filled in, a lot of blanks that still need to be filled in here. We'll continue to monitor that press conference that continues to take place in Tokyo. We'll come back to that, maybe, if required. This is Bloomberg.
what legacy I would love to leave is to make sure that in my village I have infrastructure. So long when I'm gone, things are still working, then I have done my job. And if some people get inspired through my work and then try to engage themselves for their community and create something that is inspiring for everyone, I will be happy.
What's the best piece of advice you would give to someone young who wants to make a difference actually in this world? In architecture or with something else?
Wow, I'm not the right one to just do that.
I think you are.
Yeah, but with the pressure you have, and then you try to be the good one, the fancy guy, the intellectual one, I have no advice then to believe in yourself and really work hard. You know, when I started, no one would have imagined that I will be able to see my name connected with Aga Khan or Pritzker or sitting at Bloomberg to talk about sustainability, about future of sales. No, myself 5 years ago, if you told me that, I will say no. I will never imagine. So I will encourage everyone to believe in what you're doing and not try to run after the newest of the newest. Just be consistent. Just work on things that matters for you. Really, at the long term, it pays.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome back. Now, Poly AI produces AI voice assistants for call centers. Recently secured a valuation close to $500 million, raising $50 million in a funding round from backers, including Header Sophia and N Ventures. I spoke to Nicola Mrcic, the CEO and co-founder of Poly AI, about recent growth and the adoption of the technology.
Oh, absolutely not. I think that people are confusing two things. One is there is like the first wave of kind of like people buying chips and GPUs to kind of like fuel their future growth. And then in parallel, there's like a story of even greater exponential growth just from a lower base of enterprise adoption of AI for their workflows, for their customer service, sales, and many, many other things. So in our case, growth is like a lot higher. I think like NVIDIA kind of like, you know, share price falling is just because people have gotten used to them like so wildly exceeding their expectations. But really, I mean, it is the most valuable publicly traded company. And I don't expect anything changing because wherever we see wins in AI, the house always wins. And they, at the moment, are so dominant that I don't see a reason to be pessimistic about their outlook.
Okay, the house always wins, and they're a backer of you. What is that relationship like, Nicola? How important is that relationship? Do you get better access to compute as a result of that access? How close is that relationship with NVIDIA?
It's pretty close, yeah. I mean, like it means that we got like access to compute. It means that we're just able to kind of like work with them on their further strategy and like working on models, data integration, all of that stuff. So that's a pretty important relationship, and they're like the company when it comes to this space, that NVIDIA and the hyperscalers. So for us, it's super important. And you know, as we drive our adoption of these models for the enterprise, I think we are that translation layer between, you know, what people see and expect when they, from the initial reaction to ChatGPT and onwards, and then on to like, there's just a bit of time lag while we kind of like translate that into huge ROI for the enterprise. Now, I think that a lot of companies are doing really well. We're like growing incredibly fast. I think it's just a matter of kind of like allowing smaller companies like us to reach a scale where you see a greater impact in society as a whole. But, you know, we take hundreds of millions of calls a year, and these are like nearly human-like interactions where most people don't even know that they're speaking with artificial intelligence.
Yeah, so you're breaking down that barrier, because it can be, we all know, it can be deeply frustrating, can't it? To be on call or on hold at a call center, whether it's an automated voice or a human voice, or the wait time, and you're trying to break the back of that frustration.
Absolutely. Look,
what is the potential market? What is the Yeah, right. Okay. So you know, are you breaking? Do you face resistance from clients who say, look, we don't need another voice bot. Like, it just really annoys our customers. Do you face that pushback? And how big is the total market size?
So, okay, the market size, look, there's $1 trillion of labor spent between Western Europe and North America on contact center labor. You look at CCaaS vendors, you know, the leading ones, in total, they make about 10 billion of revenue. In the whole like narrative of software eating the world, they've captured 1%. We need to seriously eat into the labor. Now, COVID and onwards, we have a crisis of customer service in Europe, in America, around the world, where companies are just struggling to meet callers in the channel of their choice. And look, that's voice, by and large. It's 75% of all customer service contact, despite all the pushing towards digital chat, web, email. People prefer to just pick up the phone and call. Now, you're right, like customers, well, they don't say that they don't need a voice bot. Customers want to do the best job they can for all of their callers and consumers, right? And we're helping them become the best version of themselves. Is there skepticism? Is there hesitation? Yeah, absolutely. I think especially in North America, where that first generation of voice IVR has disappointed and frustrated people for more than a decade. You know, what helped is the new generative wave, and people's belief that we can now do a lot better, and we're doing a lot better, right? Across all of our deployments, we improve CSAT and NPS scores relative to the starting human base. This doesn't mean we'll automate everything, but it means that a solid 50 to 75% of all interactions you have with a contact center in the future will be happening with voice AI, and they'll be better for it.
Nikola Mrcic, the CEO and co-founder of Poly AI, which is backed by NVIDIA, speaking to me here in London. And it's a reminder of the challenge that SoftBank and Masayoshi Son face as they build out their expectations, their ambitions to try and compete with NVIDIA. NVIDIA acting as a VC on some levels, investing left, right and centre in companies that are in the startup phase around artificial intelligence, but also not just the hardware, but the software component as well, the CDU or CUDA software that NVIDIA has. But Masayoshi Son has set up these ambitions.
It's a great big take on the Bloomberg talking about this today, worth a read. Kind of feels like A, late to the game, and B, has got some serious competition. And as you say, everybody seems to want a piece of the pie right now. But I keep coming back to this story that we saw Friday and what happened with Novo Nordisk and elevated expectations. As you were saying within that interview, the house always wins. Certainly that seems to be the trade at the moment. Does that change in 2025? Are we going to see more volatility, more nuance in who is going to be the winner, who's going to be the loser, how this stuff's going to be used? It's interesting that also people are bailing out a little bit on the nuclear trade right now, which is a key component to all of this on the energy side.
How does it shake out? Is this put to more of a test in 2025? And some of the energy stocks have performed better in the last three to 6 months. Is that part of the story as that continues? Yeah, certainly. Nuclear has been challenged. Other energy stocks have benefited. That's a clear blockage to the build out of this technology.
I think it was Microsoft said the other day, we're not chip constrained, we're energy constrained.
Yeah.
And that continues to be one of the big narratives here as to how AI develops. How much power can you actually plug into the systems and get these chips to work? Because they're getting better, but they're still consuming an awful lot of power.
Power and data.
Yes. Two things that goes together. That feels like it should be a sort of Bloomberg show, doesn't it? Power and data.
Maybe we just landed on good branding.
That's a great bit of branding coming up. Obviously, it is Christmas in a couple of days. We've still got a few things that are coming up this week. The thing that stands out for me is Ueda speaking midweek. Just pay attention to that. The Japanese news flow continues thick and fast. Right in the middle there, as you can see, the BOJ governor. That could be an interesting little story to pay attention to. Anyway, coming up, we've got The Pulse. I will be continuing the conversation in that show. Tom is wrapping things up. We'll both be back tomorrow. Look at that lovely day in London. This is Bloomberg.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
There is this real momentum from Wall Street. We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Honda and Nissan sign a basic agreement for merger talks aimed at creating a new force in the world's automotive industry. The French Prime Minister's self-imposed deadline to name a new cabinet approaches. Will a new team be in place for Christmas? Key question. And revised estimates reveal the UK economy failed to grow in the third quarter. Another blow to Prime Minister Keir Starmer. Let's take a look at what is happening this Monday morning. Shortened week, obviously Christmas is coming. Europe not doing a great deal today, fairly flat. There's some significant stock moves, though, below the surface, which are worth paying attention to. Let me show you the next board and pay attention to what is happening at the bottom. Novo Nordisk bouncing back a little bit today. We are seeing a little bit of a recovery, but bear in mind this stock is still down heavily versus where we came in to the beginning of Friday's session. And then we got that big drop. Elsewhere, not a great deal of action, to be brutally honest. We are waiting for Christmas to come. Maybe we'll get a bit more volatility going into the start of next year. Anyway, plenty to discuss. Let's get going. We're counting you down to Christmas and what could be an interesting 2025. Let's get going.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Good morning, welcome to The Pulse. I'm Guy Johnson in London. Let's talk about what's happening in the car sector. That's the big story, certainly this Monday morning. Honda and Nissan have agreed to start merger talks. The two Japanese automakers say they aim to sign a final deal by next June. This also includes Mitsubishi, by the way. It's going to be a holding company. We think that's probably going to be in place end of June into August. At a press conference a little bit earlier on today, the former Nissan chairman, Carlos Ghosn, said the tie-up, though, doesn't make a lot of sense to him.
A potential alliance or partnership between the two companies are going to be another company fighting for survival and relevance into this industry. But without any doubt, they're going to have a tough time against the Chinese, against companies like Tesla.
The press conference in Tokyo between these three companies is ongoing. Just bear that in mind. You're going to continue to see headlines coming out. Our global auto editor, Craig Trudell, joins me around the desk. Craig, Carlos Ghosn's not impressed. Is everybody else impressed? Is this a deal that needs to get done? Is this the right format? What are people saying?
I think some of the points that Mr. Ghosn made on Friday are absolutely valid. This idea that these are two companies that are very big in Japan and very big in some markets where they sort of share a commonality. Does it make a whole lot of sense if you are putting two companies together that have significant overlap in where they are geographically, where they are product-wise? I do think that there are some merits to this in the sense that Nissan is a company that has missed the mark in terms of hybrids, and we've seen a real renaissance there. There's some potential for making up for some of Nissan's shortcomings in that regard. But for the most part, these are two struggling companies with similar challenges in terms of where they're positioned, and there doesn't seem to be much sort of rationale here other than Nissan is in real trouble and needs significant help and fast.
Let's talk a little bit about what is happening with Volkswagen this morning as well, because in some ways there's huge parallels between what is happening in Japan and what's happening in Europe right now. Struggling auto sectors in both, and you kind of look at what we've got from Volkswagen, the deal that they've done with the unions, and you look at the market reaction this morning. When I came in first thing this morning, we were expecting Volkswagen to pop like 2-3%. That hasn't happened. Why not?
Yeah, I mean, I think when we take a look back and we think about, what sort of 2024 is going to go down, for the automotive industry, it's the year that the Chinese really just absolutely sort of exerted their will on this industry. And we've seen now, two major Japanese players potentially need to join forces as a result of this. And in Germany, an attempt to do what has the writing's been sort of on the wall that they've needed to do, which is really get competitive, restructure themselves, get that VW brand into a position where they can compete in this new sort of world order. And we saw a real letdown in terms of what management put out there as what needed to be done, potentially closing 3 plants, really significantly bringing costs down. I think management is trying to save face and say that they've done that, but they aren't closing any plants in Germany, and they absolutely are in a position where they need to significantly lighten up. And it's probably the case that we're just going to return to this issue in 2025.
Europe needs to become more productive. It needs to become more competitive. That's the Volkswagen story, and in some ways, that's the story coming out of Japan as well. Craig, great stuff this morning. Thank you very much indeed for joining us with all the coverage. That press conference ongoing in Tokyo. Craig Trudell joining us all over that story and all over what is happening with Volkswagen. Paul Hollingsworth, head of developed market economics at BNP Paribas, joining us also around the table. Good morning.
Morning.
You look at what is happening in the auto sector, and it's just kind of emblematic. Tokyo, the story there, big merger coming through. Germany really struggling. Europe in particular is really struggling with productivity. It's struggling with competitiveness. Do you see any signs of that changing in 2025?
I think these are things that will take a very long time to change. I'd say if there were some silver linings is that policymakers know what needs to be done. We've had the Draghi report, we've had the Letta report from earlier this year. So there are now a concrete set of policy proposals. The question is whether policymakers will now take those up and actually start to implement them.
The problem with that as well is that we've just got huge amounts of political instability in Europe. You look at what is happening in France, we've got elections coming up in Germany. This doesn't feel like a recipe for kind of making progress. Yeah, great. We've got a Draghi report. We know what the roadmap should look like, but whether or not we're going to follow it, as you say, is a big and open question.
Absolutely. Political stasis in Paris and Berlin is clearly not going to help take things forward. But some of that may start to clear as we move into 2025. The German elections, coming up in February, and if we end up with a more stable coalition out of that, potentially a grand coalition, that could be something that paves the way for some positive developments, not only at the European level but also within Germany. There is talk of potential reform of the debt brake. I think that would be a game changer from a fiscal perspective and something that could at least help to strengthen the German economy, and that would have potential positive spillovers for the rest of the bloc.
Does the surprise in 2025 come from Europe then? I feel like I'm grasping at straws here when I've got Trump over here and the United States.
So look, It's quite easy to be pessimistic about Europe right now, and certainly when I speak to investors, there is a lot of pessimism already out there and already in the price. And I think that is the key thing, is that everyone knows the combination of structural and cyclical challenges that the European economy faces even before Trump takes office. But we now have some potential silver linings that probably are not yet priced. You know, as I say, German fiscal policy and the expectations that something could come from that. We've already seen expectations that more defense spending will come, and that could be something that is also positive from a growth perspective. So, perhaps there could be some surprises coming, purely because everyone is so pessimistic to begin with.
Do you think European economics allow for a 5% GDP spend on defense?
I think 5% would be quite challenging, not only for Europe. And if I look at the latest NATO report from back in June, you saw 23 out of 32 members are spending 2% of GDP on defense, but the median is only 2.1. So to go from 2.1 to 5 is a big, big stretch. Some countries clearly have much more fiscal space than others, Germany being one of them. But this comes down to the point, and it's something you've already been discussing this morning, there are common issues, climate being one, defense being another. How do you fund it? Is it done at a national level? That becomes difficult because different countries have different fiscal spaces, or is it something that is done more at a European level? And I think that's potentially where the discussion is going to be moving in 2025.
How helpful is the ECB going to be in Europe in 2025? It was interesting. I was talking to ING a little bit earlier on, saying they should have done 50, they should have already gone, they should have moved. But I'm listening to McLuth out of Ireland this morning as well, talking about the fact that we get to neutral, we don't go any further, we don't get accommodative. And most assumptions are that neutral's kind of 2.5 in Europe. Do we stop there? Do you think the ECB can get accommodative and support the European economy?
So our own estimate of neutral is it's a range and somewhere between 1.5 and 2.5. So our expectation is that the ECB will cut to 2, so the middle of that range. Right. We think that's consistent with the outlook as we face 2025. The fundamentals of the recovery are still in place. One, consumer real incomes are going up. This is positive. And two is we have the impact of ECB cuts that have already been delivered and are expected to continue to be delivered. That is going to start feeding through into the economy as well. We already see that in things like the ECB's bank lending survey. The demand for borrowing is picking up. We need to see that follow through into actual real economic growth, but we think we can expect that as we move into 2025. That will help to offset some of the headwinds that we see from, let's say, geopolitical uncertainty.
If Rachel Reeves wants to deliver a reset in the UK in January to what has been delivered thus far, the budget seems to have had a fairly negative impact, and the data support that idea that we've seen this morning. What does she need to do? What needs to change in the UK to get the numbers moving in the right direction rather than the wrong direction?
So I think the UK faces a challenging situation at the moment in that growth on the one hand has been quite weak. We saw some of the figures this morning suggesting the economy has been barely growing at all. On top of that, the inflationary pressures are there. So if you like, to put this into a global perspective, the UK has, let's say, slightly better growth than Europe if I think about the outlook for next year, but the inflation that looks more like the US. So you have quite a challenging combination here.
That sounds like stagflation to me.
The directional moves are very much there. I wouldn't characterize it as stagflation. We see the UK growing next year. We have 1.4% growth as our forecast. So we think the recovery will be coming through. And one thing to pull back on the budget point, we have seen a lot of pessimism around that, particularly from the business community. But if we go back to the OBR's expectation of the measures, it was actually that it would boost growth. So you have on the one hand this impact on businesses, but you also had government spending, which is going to be picking up.
So we haven't seen the effect of that yet.
I think that's right.
The problem with that is that it's really hard to judge the efficiency of government. I don't know whether that money is going to be positive or whether it's going to be wasted. And at the moment, the OBR seems to be assuming that there's quite a lot of positivity coming through from that government spending. The potential for waste seems quite high as well.
I think there's uncertainty exactly on that point. I would also say there's uncertainty on other elements like the national insurance contributions and the rise there in terms of who pays. Does this come from businesses simply passing on the increase in their labour costs onto prices, in which case it becomes an inflationary shock? Is it something that leads to lower headcounts? We certainly see that from some of the survey evidence as well. So there are a lot of uncertainties for the UK heading into next year. And that inflationary consequence is something that the Bank of England is going to have to grapple, because on the one hand you have weaker growth and you also have stronger inflation, and that's why, if I again put this into a global context, it looks like the BOE will continue with a cautious easing cycle. We think they'll cut once per quarter.
Gradual.
Whereas gradual. Whereas the ECB seems to be on more of a swift cutting cycle, we think every single meeting until they get back to 2.
Have a great Christmas, Paul. Thanks
you.
for stopping by to see us just before Christmas Eve. Paul Hollingsworth, Head of Developed Markets Economics at BNP Paribas. Okay, we're going to turn from the UK to France next. The French Prime Minister struggling to meet a self-imposed deadline to name a new cabinet. We thought it was going to be last night. Now appears it's going to be Christmas is the new deadline. We'll discuss all of that next. This is Bloomberg.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space. That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Minutes past the hour. Welcome back. The French Prime Minister, François Bayrou, running out of time to meet his self-imposed deadline to name a new cabinet that can survive a no-confidence vote in Parliament. So the new government's top priority, crafting a 2025 budget, also surviving, I think, is probably a priority. Bayrou aiming to finalise that budget by mid-February. Claudia Cohen in Paris. Claudia, we were expecting a government last night. We are now apparently going to get one on Christmas Eve. Why the delay?
The delay, so the new Prime Minister Bayrou met Macron yesterday twice, and so we were expecting an announcement, but they did say that they were doing final adjustments. So the final adjustments are actually trying to convince people to join the new cabinet because, for instance, the right-wing party, the Republican, they had some really clear red lines, and they were expecting kind of a written agreement to make sure that those red lines will not be crossed. And as we know, this morning, François Bayrou actually sent a document to the right-wing party stating that all their demands, if we can say that, will be met.
In terms of, other than surviving, what is job number one? What does it need to get done?
I mean, job number one is to close the widening French deficit. As you know, the public deficit should be more than 6% of GDP next year, which is a lot, like one of the main figure in European country. So this will be number one priority. But this is kind of a tricky equation because François Bayrou, I said that he wouldn't put too much pressure on business because, as you recall, with the ex-president Prime Minister, Michel Barnier, like a lot of tax raise were supposed to happen on corporate. He said that this wouldn't happen. And then like he said that he was ready to also reopen the French pension reform. So the main priority would be, okay, you need to close the deficit, but where would you find the money, actually? And we don't know that yet. So French people, French opposition also are expecting to know a bit more about that in the next few weeks.
In terms of what the French people expect from this next government, how high are expectations? How low are expectations? Is there an expectation that this government can last until Easter? What are people talking about in Paris?
People are just saying how messy the situation is, and unfortunately, I think that the expectations are quite low. I don't know if you saw that, but there was a poll released yesterday saying that François Bayrou popularity is extremely low, like one of the lowest, only a few days after becoming prime minister. I think the expectations are quite low, and what's the most important thing I would say for French people, but also for businesses, is that there won't be too much disruption, you know. Everybody is just like, we'll see what happens, but we just hope that the road until the next presidential election in 2027 will be quite smooth. The expectations are low.
Yep. My experience of French roads is they are quite smooth. But Claudia, thank you very much indeed for joining us. Claudia Cohen in Paris, thank you very much indeed. We're going to carry on with the political instability. Up next, a feud over the Panama Canal. Donald Trump threatening to reimpose US control over the waterway. Who saw this one coming? We'll talk about it next. This is Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern only on Bloomberg. Context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
So, the second term doesn't even start for a month. Trump, though, is already sending shockwaves around the world. The latest shockwave, the Panama Canal. Who'd have thought that one was coming? The president-elect claiming the Panama Canal has fallen into the wrong hands, and the U.S. vessels are being charged exorbitant fees. He's threatened to reimpose American control of this key waterway.
The fees being charged by Panama are ridiculous, highly unfair, especially knowing the extraordinary generosity that has been bestowed to Panama, I say very foolishly, by the United States. This complete ripoff of our country will immediately stop. It's going to stop.
Every square meter of the Panama Canal and its surroundings belongs to Panama and will continue to be. The sovereignty and the independence of our country are non-negotiable.
Who saw this one coming? Jill Desis joins us now to discuss. Jill, what do we make of this? What do we make of this threat?
Well, Guy, it looks like, once again, Trump's kind of wading into, yet another grievance he's kind of taken with another country. But we've seen this sort of protectionist attitude toward Trump that Trump has indicated toward other nations before, saying basically they need to pay their fair share, that kind of thing. It does seem like this time around, again, he's saying that, he's claiming that American vessels are charged these exorbitant fees passing through the canal. Obviously, you've heard the Panamanian president, kind of push back against that. Worth noting, of course, that the United States is by far, sort of the largest client of the Panama Canal here, about 2/3 of, that traffic that's coming through. But the other piece of this really does seem to be geopolitical. Trump really kind of suggesting that he's taking issue with, issues of Chinese influence. Now, it's no secret that Beijing has really tried to, sort of assert more influence, particularly in Central and South America over the last several years. If you were to connect the dots, I guess you could say, there's several ports sort of surrounding the Panama Canal. 2 of those are controlled by subsidiaries of a Hong Kong-based company. So maybe that's where the China connection here comes in. But ultimately, Guy, what this is really telling us here is that this is just part of, Trump is really kind of coming in and shaking things up. Whether that actually leads to anything material involving Panama, we'd have to see. But I would say that, we've already seen him shake up in other, global spheres as well.
Yeah, we nearly had Washington shaken up by the shutdown. That has not happened, but he's not stopping there. Elon Musk also out overnight saying that the Fed is absurdly overstaffed. Is this one of the big threats for 2025, that that Trump and the administration pick a fight with the Fed?
Well, Trump has certainly, kind of pushed back against the Fed, and even Federal Chairman Jay Powell before, who he appointed in the past, has kind of, suggested that maybe it's the White House that should have more influence over the Federal Reserve there. I think worth noting when it comes to Elon Musk's tweet is that the Federal Reserve, both in Washington and sort of around the nation, these regional banks all have about 24,000 staff members, smaller than sort of the equivalent Euro system here. But also, Elon Musk has been tasked, of course, in the Donald Trump administration with this Department of Government Efficiency. We just saw him sort of take this out in the course of the bill last week, slimming it down. So it not maybe necessarily surprising that he's going after the Fed as well.
Jill Desis, thank you very much indeed. This is Bloomberg.
the dirty little secrets of credit is that the businesses generally don't pay you back, right? The markets pay you back, M&A pays you back. So what is the most important thing is to always make sure that the borrower is worth more than the loan. And as long as the borrower is worth more than the loan, then it might be a rocky ride, but you're going to get your money back. And this world where there's these disruptive companies that have, let's call it 100, 200, 300 million of ARR, are looking to not raise equity capital because of the fact that they raised it in 2021 or 2022, and no one really wants a down round. But there's a lot of capacity in the capital structure to have, let's call it a structured solution. We think that there's a lot of opportunity with those businesses.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
Monday the 23rd, good morning. Welcome to the Pulse. What are we, 29 minutes past the hour? I'm Guy Johnson in London. Let's talk about the top stories this morning. Honda and Nissan signing a basic agreement for merger talks aimed at creating a new force in the world's automotive industry. The French Prime Minister's self-imposed deadline to name a new cabinet approaching. We think it's now Christmas Eve. Will we get a new government by Christmas? It's an open question. Plus, revised estimates reveal the UK economy failed to grow in the third quarter in another blow to Prime Minister Keir Starmer. Let's talk about the stock story this morning. We're watching the auto sector firmly. That's certainly one of the big stories we're watching. You've got the Tokyo element. We're watching that merger forming. You've got Volkswagen on the move as well. We're watching Novo Nordisk bounce back a little bit, though. Remember, this is Europe's biggest gainer this morning, but you need to see it in the context of the last few days, because on Friday it fell by the most on record. This after a new drug prevented it effectively leapfrogging its biggest rival, Eli Lilly, in the red-hot market for new obesity drugs. So study results of the experimental obesity shot Carasema fell short of the 25% weight loss that had been predicted, and the market reacted really strongly to this. Son of Us joins us now out of Copenhagen. Look, we saw this huge amount of value being wiped off on Friday. We're bouncing back a little bit this morning. Where is the middle ground? This data was hugely disappointing, but was it that disappointing?
I mean, yeah, it was, as you say, it was disappointing to investors. But, I mean, you would think based on what happened on Friday that this drug was a big flop, but it really isn't. We still saw on average more than 20% weight loss for patients on this drug. The problem for Novo was just that it had promised too much. It had said ahead of the trial that it could deliver, CagriSema could deliver 25% weight loss. So there were high expectations for it. Novo was very confident, and it missed that mark by several percentage points. And yes, we saw a huge wipe of market value on Friday. And while the stock has recovered a bit since, it's not nearly enough to recover all those losses.
So in terms of, can you just walk me through the details of what happened around this study? Because do we know the full details yet? Is this an early read on that study? Are we going to get better information further down the road? Like, what does it mean for Novo and this drug in particular?
Yeah, we will get more information further down the road. Novo will release more details next year, and those details will be important for the further assessment of the drug. And Novo has said so far that it is encouraged by the results. It still intends to launch it to market in 2026. Some of the details we're waiting for is around, to give you a background, Novo allowed allowed its patients to remain on a lower dose of cagrilintide if they wanted to, rather than the usual stepping up to a high dose. And a lot of patients did just that. So the big question mark now is, why did they do that? Is it because of side effects, in which case that's obviously a negative story for Novo? Or could it just be that they were simply happy with a slower weight loss? And so those are the details that Novo will be releasing soon, and the market will be waiting for.
What impact did this have in Denmark? I'm really curious. This is a relatively small country. This is a very big stock. It has a disproportionate impact on the stock market. It can move the currency. A lot of people obviously will hold this stock. What was the view? How much shock was there in Denmark over this weekend after what happened Friday?
Yeah, I mean, I've been on several times during this year talking about the disproportionate impact on Novo Nordisk on Danish economy, and how the country is really getting very dependent on this one company. And of course, on Friday, as a Dane, it was a bit scary to see how much of a hit that one single piece of news could have on Novo's share price. Danes would have felt it across pension fund values and their investment portfolios. We saw the krona weaken, but really it also raises the question, raises a reminder that for long-term growth, Denmark really needs to look beyond just this one company and see what else could be a future growth driver for the country.
Sanne, we've appreciated all the coverage this year. Thank you very much indeed for joining us this morning. Sanne Walls joining us out of Copenhagen on what is happening with Novo Nordisk. Let's turn our attention to what's happening here in the UK. So we've had some data out this morning. It doesn't exactly paint a particularly positive picture for the UK economy. Retail sales growth certainly less than anticipated, growing more slowly than anticipated in November. We're obviously now into December. The numbers suggest Christmas shoppers might not actually deliver that big a boost for the economy in these crucial final months of the year. Bruce Findlay, Managing Director of Retail at Landsec, which owns some of the biggest shopping centres in the UK, joins us now. Bruce, we've had GDP data out this morning as well. None of it paints a particularly positive picture. So I'm interested to get your take, kind of boots on the ground take, as to what is happening with the UK retail story going into the Christmas period. What are you seeing?
Good morning, Guy. We actually we did have a challenge in November with Black Friday actually falling on our December figures. But Black Friday was a tremendous performance period from that Friday through the weekend into Cyber Monday. We actually saw footfall up almost 10% and had some record-breaking sales in our outlet channel.
Do you get a sense that people are spending more? What are people spending their money on? Kind of, if they are going out shopping, are they going out and spending significant amounts of money? What is the correlation between footfall and spend?
Yeah, so I was out this Saturday in Bluewater in Kent, one of our larger shopping centres, and the footfall there was tremendous. There's, of course, a lot of last-minute shoppers coming out. One of the growth categories we've seen all year is in health and beauty and the general wellness. And Sephora, who had a store opening there recently, we had 750 people queuing up overnight to be part of the grand opening the next day. And I think that just shows the resilience of the UK shopper. And when you get your product right, the brands in our shopping centres can really perform.
What do you think happens next year? A lot has been made recently of the fact that businesses aren't happy with what happened with the national insurance contributions, that ultimately we're going to see fewer people being employed or potentially people being laid off as a result of that. Are people going into next year kind of glass half empty, or is the glass half full?
Of course, this golden period, golden quarter is really essential for the retailers to set them up going into next year and clear through their inventories. We're hearing mostly positive things. We're seeing our store rollout and leasing continue to have the momentum we saw coming out of the pandemic. So, of course, that's not to dismiss those macro challenges out there. But as far as employment, everyone's been gearing up through the Christmas period. Yep. So we're pretty optimistic.
In terms of that national insurance contribution, one of the biggest kind of voices that has come out against that has been the retail sector. How big an impact is that going to have an impact? Are they going to be employing fewer people? Are we going to see a less optimistic retail sector as a result of some of the tax changes that are coming through?
Those are definitely challenges that are well traveled out there from the big retailers, from M&S, Next, the supermarkets. But they've all had a lot of work from the pandemic till now. The strong have worked hard on their P&Ls, and even with inflation, they're working hard not to pass on those price pressures to their customers where possible.
In terms of investment going forward, where are retailers investing? What is it that they are investing in? Is it storefront? Is it stores? Is it what is happening with the warehousing? Is it happening with the kind of the omni-channel investment that we see from brands like Zara in terms of the ability to track a lot of inventory and understand what that inventory is doing? As we look into 2025, Bruce, where are they going to be investing? Where does the retail space invest its money next year?
Well, that's a great question. When you look at a brand like Zara, they've been very, very clear on their strategy on fewer, bigger, and better stores. That allows them to bring their whole range together. So recently in Trinity and Leeds, we had an empty Topshop unit, and they came in there with their new flagship concept that brings men's, women's, kids, and of course all their omni-channel click and collect services, which is another big driver of footfall to our schemes. So retailers are investing in those great shop fits. They're investing particularly in experience, and whether that's great staff or the actual store environment itself and the digital connection. Because as you said, it's an omni-channel world. Shipping from store, being smart with inventory, click and collect, getting the consumers to come in there and browse their collections.
Just kind of wrapping it up, what do consumers want when they come shopping these days, and how much is that now evolving post-pandemic? I see so many of these big retail areas now having all kinds of other things bolted onto them. Cinemas seem to be increasingly popular, as far as I can tell. How is the shopping experience evolving?
Well, certainly it's always been about experience, but now that experience ranges from great food, and of course it's about the social aspect, the people being out dining with their friends, with their loved ones, their family. The cinema industry is a great example, and of course those the difficulties they faced this year have been well noted. But the recent performance of Gladiator, Wicked, and this has been a great boost to the cinema industry as one of the best months in terms of box office. So even there, you see where you get your product right, people will come out, and those shared experiences are really key.
And just to kind of wrap it up, what do you think is going to just kind of? You were out at the weekend. You talked about Sephora doing very well. Is that going to be the big trend this Christmas? As we look back on Christmas as we enter 2025, what do you think is going to be the standout story from this Christmas?
It's a tough question because the shoppers are so hard to predict. I think we're going to see the leading retailers continue to perform well, whether it's in the sports categories where you see people like JD Sports, right through to M&S continuing their great run. We're anticipating most of the categories to really see an uptick as the consumers come out and vote with their feet and their wallets.
Bruce, have a great Christmas. We'll look forward to hearing from you in the new year and see what kind of a Christmas it's been. Bruce Findlay, Managing Director of Retail, joining us from Landsec. Thank you very much indeed. Coming up, we're going to turn our attention back to the auto space. Volkswagen and unions reaching a deal to keep plants open in Germany, but the auto giant still faces a very bumpy road ahead. We're going to look more closely at the challenges next. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything. Politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Monday the 23rd, welcome back. Let's talk about some of the other stories that are making news this morning. The Kremlin has confirmed that President Vladimir Putin and Slovakia's Prime Minister discussed the looming end of a Ukrainian-Russia transit agreement to send gas to Europe. Russia's TASS news agency reported the Kremlin saying the situation is, quote, difficult. The gas agreement will likely end on January the 1st when Kyiv shuts down all supplies. Robert Fico made a rare visit to Moscow by a European leader. Haven't seen much of that. These are pictures that come from the weekend. Let's turn attention to what is happening in Germany. A German judge has ordered pre-trial detention for a man suspected of driving a car into a German Christmas market in Magdeburg. The incident left 5 dead and dozens more injured. The 50-year-old man has been identified as a doctor of Saudi origin who works in the region. Authorities are investigating his potential motives, including an early warning from the Saudi authorities. And a senior leader from Chancellor Olaf Scholz's party is calling for an antitrust act to limit the influence of Elon Musk. Dirk Weiser told Bloomberg the act would lead to a breakup of Musk companies, which he called monopolistic. The world's richest man, triggering controversy last week when he voiced support for Germany's far-right AfD party on his social media platform X. Musk also called for Scholz to resign following Friday's Christmas market attack. Let's talk about the automotive. Let's talk about the automotive sector. And we've been watching all morning the news coming out of Tokyo and what is happening with Honda, Nissan, and Mitsubishi. But let's turn our attention now to talk about what is happening with Volkswagen. Volkswagen reaching Friday an agreement with its labor leaders to try and keep German plants open while cutting capacity at its namesake brand, Volkswagen. The rise of China's EV industry, of course, has left Volkswagen in a tough spot. So Bloomberg Originals has been looking at the existential challenges that this company is facing and the knock-on effect for Europe's biggest economy.
Cars are integral to Germany's modern economic and industrial identity, a pop cultural export and political lightning rod. 87-year-old Volkswagen embodies this on a global scale.
It employs 680,000 people around the world. It has dozens of production locations. Millions of people, workers in other industries, are reliant on the business that they get from this company.
It owns several household names. Some of those households are very wealthy indeed, while others descend from VW's principal demographic.
There was a big celebration in Germany to mark the 1 millionth people's car since the war.
The whole idea of the people's car was that every individual in the country would be able to afford one.
Decades later, in 2023, VW's portfolio generated 320 billion euros in sales, equivalent to about 7.5% of Germany's entire GDP from that year.
Well worth a watch. You can see the full documentary on your Bloomberg terminus, also available on Bloomberg.com and on the Bloomberg Originals YouTube channel. Up next, we're going to take a look at what is happening in the UK. We'll look back at what a year it has been for UK markets and the economy and look forward to what we can expect from 2025. John Stepek's going to be joining me around the desk. That's next. This is Bloomberg.
Countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg. From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
I know Christmas is coming, but it's a couple of days away, and therefore there is the opportunity to talk about some dismal news before we get there. And the UK economy this morning certainly providing a little bit of that. The UK economy failed to grow in the third quarter. Revised estimates basically show that since the government took over, things have got a little bit worse. In fact, they've got quite a lot worse. The figures deliver, of course, a blow to Keir Starmer, though how much attention he pays to what's happening in the Treasury is a moot point. Certainly a big blow to Rachel Reeves. The pair came to power, of course, promising to boost growth and living standards. John Stepek sat down next to me just a couple of minutes ago and said he's feeling really quite downbeat. Now, I imagine he was quite downbeat before we came into this latest quarter, so now where are we? Let's find out. Okay, you're even more downbeat now. Why?
Well, I think the issue is I came into this year because I'm actually feeling quite optimistic about the economy, and I think most people did. Yeah. It's almost, I mean, it's been a year of two halves, guy. You know, it's like, definitely. You know, we've had 6 months in which, at the start of the year, in which the economic news was getting ever so slightly better. Interest rates were expected to come down reasonably rapidly. And also people were looking forward to getting rid of a government that was kind of old, long in the tooth, and very much detested. And so then we got the election, and immediately the new government went from being quite sort of talking in a city-friendly way, a business-friendly way, to, you know, complaining about the mess that had been left by the last lot, which is understandable from a political point of view, but from a confidence point of view, it was like a punch in the face. And then the budget was, to put it bluntly, was anti-business, like actively anti-business. The choice to raise employers' national insurance contributions had the predictable impact of basically making most businesses decide to go on a hiring freeze. So basically, we came in with people looking forward to getting rid of one government, and we're going out with people still looking forward to getting rid of government that they can't get rid of for another 4 years.
Rachel Reeves apparently is going around telling everybody that she's a fighter and that she's going to have a big reset at the beginning of next year. How big is it going to have to be? What does she need to do?
I mean, she would have to U-turn on the employer NI thing is the big thing.
Yeah.
Because that's the thing that is, if it's going to mess anything up, it's going to. What you've done is you've turned around to businesses and said, here's a whole load of new costs that you're going to have to bear on top of the rising minimum wage and kind of changes in regulation. And that's why the immediate impact on any sensible business is, okay, well, we need to have a rethink about whether we're going to invest, whether we're going to hire. And this is why, the big danger for the UK is that the employment market goes down. Because we can cope with...
Because actually employment's fairly good at the moment.
Exactly, and employment actually in the UK has basically been fine since the 2008 financial crisis. It was the one thing that we've had going for us is that most people generally have had jobs if they wanted them. You take that away, and we will have a recession that will be a nasty recession rather than,
just the plain vanilla
ones. Exactly.
Yeah. Let's talk about next year a little bit. So on Friday, I'm watching Novo Nordisk drop like a stone. And the kind of red light that's flashing in my head is this a warning for what can happen with stocks like Nvidia?
I think you're absolutely right. I mean, because the kind of two big tech hype stories this year, obviously there's been artificial intelligence, which has been the biggest one, but the other big one was the GLP-1s, and also the anti-fat drugs. And of course, Novo Nordisk it is now basically the Danish economy, isn't it? And so, but as you say, it kind of dropped 25% because, and it wasn't even an earnings thing, it was a very small miss in the level
but expectations are being hyped.
Exactly, aye. And I mean, I can absolutely see something like that happening to AI, particularly because, I don't know, if you've, like over the past 2 weeks, the sentiment indicators, as in the informal indicators that I like to pay attention to, have just been off the charts. It's like you've had Trump as Times Magazine cover guy of the year. You've had Trump ringing the bell in the US stock exchange for the first time. They say don't ring a bell at the top. He may well have literally rung a bell at the top of this market. I mean, I just don't, in the latest Bank of America Global Fund Managers survey, it was called Max Americana. That's the title they put on it.
We just need the Economist's front page.
Yes.
Just to nail it on.
Yeah, absolutely. So, honestly, I feel we are overdue a correction. And if we don't
Correction means?
At least 10% off.
Everybody will just go, I'll just buy that. Thank you very much.
I mean, they might jump in and do the whole BTD thing, but I wouldn't want to commit to something as dramatic as a bear market, although I do think it's a possibility next year. But I feel that, a 10% is kind of nailed on. Almost, I mean, I would be, I'm about 75% confident.
Lots of volatility around that?
Probably a lot of volatility around that.
Because other central banks are cutting. There's lots of money sloshing around the system.
Yeah, well, see, the other problem we've had this year is the interest rate issue has, we went into this year thinking, for example, in the UK, we were going to get 4 rate cuts by the end of the year. We only ended up getting 2. And now the kind of market's starting to think we'll only get 2 next year. I think interest rates will be the big thing to watch as well.
Great stuff, John. Always a pleasure. John Stepek, Money Distilled, worth reading. The newsletter's fantastic. Right, that wraps things up for me. Christmas shopping time. 2 days to go. Christmas is coming. This is Bloomberg.
recent years, you created an institute, the Jane Goodall Institute, and what is that designed to do?
Well, that was started in 1977 when by then I had a little research station and 4 of my students were kidnapped and everything shut down. And so some friends of mine said, well, let's start an institute so that this research can carry on. Bless them. So that was 1977, and it was set up to study, conserve chimpanzees and other animals and educate. And it's developed since then. So it's, you know, we've got 27 Jane Goodall Institutes around the world. And then I realized at some point that the African people living in and around chimpanzee habitats right across Africa were struggling to survive. There was crippling poverty, lack of health and education, moving deeper into the forest, being exposed to diseases like Ebola and HIV from the chimpanzees and vice versa. It hit me. If we don't help these people to find ways of making a living without destroying their environment, conservation won't work.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Good morning from Bloomberg's European headquarters in London. I'm Danny Berger. Manish Krani is off for the week. Welcome to Bloomberg Brief. Let's set your agenda. Global politicians on notice. President-elect Trump threatens to regain control of the Panama Canal. It's a deal. Nissan and Honda plan to merge to create the world's #3 automaker. And in a year that's been upended, the bond bulls and the stock bears, markets enter their final stretch in a holiday-shortened week. And in this week, we were saved. We were saved by cooler PCE after the worst week for the S&P in over a month. Has the Fed gotten too negative on inflation? It is tech that leads the Fusion Sessions higher this morning, up about 0.5% for this bond market. Again, little change. It is going to be light volume all this week. Light volume, which will be met with Treasury auctions. We're going to get $69 billion worth of 2-year notes on slate today. At one point, yields last week reaching the highest level since May. Your 10-year yield up 1.6 basis points, 4.53% is where we are. We are at least saved the drama of a government shutdown this week. Let's get some of the individual stocks we are keeping an eye on this morning. Nissan, as I mentioned, it is planning to merge with Honda under a holding company in 2026. So Nissan shares up more than 1.5% off the back of that. Plus, we're looking at both Palantir and Endural this morning. They are on talks to partner with rivals to form a consortium that would bid together for U.S. government work. Palantir up 1.1%. Meanwhile, Broadcom, that gets an upgrade to positive from stable by Fitch. They say that it reflects the company's strong financial profile. That is up 2.4%. And in just moments, we're going to be catching up with Anika Gupta of Wisdom Tree and Ian Steely of JP Morgan Asset Management. So much to talk about this morning, not least of which is just a calm market as we look ahead to 2025. And there's quite the range for where this bond market might go. The FT has a survey of the sell side. The average, they say, It's 4.1% for the end of the year in 2025. So that is a rally. On the most bullish side is Morgan Stanley. They see 3.6%. Deutsche Bank, the most bearish among the banks, seeing 4.7%, saying that Trump policies will force more inflation, will force not as many cuts as we're expecting, and higher yields. Joining us now is Anika Gupta, Director of Macroeconomic Research at WisdomTree. Anika, really great to see you this morning, especially in person. Look, at the end of 2024, where we're at this point a year ago, 23 rather, I mean, we got the bond market wrong, I think is fair to say. What are you thinking about the outlook for where this treasury market goes, for where 10-year yields might end the year?
Yeah, I think I would side on higher inflation, bond yields moving higher. Our expectation is for it to reach 4.9% by 2025, and that's largely predicated on the results of the U.S. election. Trump's America First policies are going to drive inflation higher with, the tariff wars ongoing. In addition, his focus on lower regulation, higher M&A, all of these factors, and obviously the more expansionary fiscal stimulus is likely to, lead to that tailwind for inflation and lead to higher yields.
4.9% is definitely something this market doesn't feel like it's prepared for. How does that contrast with the risk-on rally we've seen everywhere, with the enthusiasm of what Trump policies would mean for risk? Are those higher yields enough to upend that?
So I think, Danny, since the election took place, we've seen a very good Trump being priced in, where the fear of these trade wars have been dialed down. The expectation of a more pro-U.S. stance has been priced in. If you see off late, over the last few weeks, we have seen a bit of a correction. Investors are now trying to gauge where his policies are likely to be headed. And we can clearly see that what he's open to is a negotiation. So any country that's willing to negotiate on his deals are likely to benefit. But those countries that are not willing to negotiate, they are going to have a lot of tension. And there is going to be a lot of, trade friction going on, which is likely to be factored into equity markets. So there will be a lot of volatility moving into 2025.
What do you make of the argument, though? This thing, personnel is policy. We learned over the weekend he's nominating Stephen Marin to be the chair of the Council of Economic Advisors, someone that has a rich financial background. We got Scott Bessent. We got the good picks, and a lot of investors have taken comfort in that. Why don't you?
Well, we definitely take comfort in the fact that, we have a pro-growth mode for the U.S., but what we don't take comfort in is the uncertainty that lies ahead, the uncertainty of his relationship with China, the uncertainty of the trade frictions with Europe, where Europe is already facing such a difficult situation. The unlikelihood of how trade could pan out with Japan. All of these factors do keep a lot of uncertainty remaining for markets in 2025.
What does that mean for cuts, the Fed's dots of 2 cuts in 2025? Could we be talking about hikes in this scenario?
I would definitely rule out the possibility of hikes, but I would definitely move in line with the Fed's dot plots of only 2 rate cuts. And that's quite a take back for the market, because they were previously anticipating about 4, and now that's been priced down to just about 2. So that is another headwind that will be facing equity markets, moving into 2025.
We're just thinking about some of these frictions. Even if it is a pro-growth policy, we're already in a place where labor markets are starting to cool. You could argue just how much they're cooling. The idea of a strong dollar hurting exports. We know home builders are struggling. That seems to portend a growth scare, or at least is a growth scare underpriced by this market for next year.
Yes, that is one side of the argument. But then the other side of the argument is you have financials that are likely to benefit because yields are going to remain higher. You also have less regulation. So financials as well as industrials are likely to benefit. The tech sector is also likely to benefit from that lower pressured regulatory environment. In addition, obviously, Trump is going to try to negotiate the best deal for the U.S. So that, again, benefits, U.S. stocks and U.S. equities. But for me, the most important will be, trying to gauge the best valuation play for 2025. And I think this is where valuations will matter. Because obviously, on one end of the spectrum, you've got the overpriced, overvalued technology stocks. And at the other end of the spectrum, we have the small caps and the value segment of the market that seems very, very underpriced. And that segment of the market does have an opportunity moving into 2025. We do see that broadening of the rally likely to take place as we get that pro-growth stance in the U.S.
You've been writing a lot about Japan after last week's decision, and one of the more interesting things I think you wrote, Anika, was this idea that the BOJ isn't controlling the yen right now. And you could say that of a lot of central banks. Yes. Brazil, for example, trying to hike to make sure they have a strong real. The SNB cutting by 50 basis points to fight some of the strength in the Swiss franc. What does that mean for global policy in 2025 when it's not just the dollar, it's not just the Fed, but it is now politics that is really asserting itself as the driver?
Absolutely. We're going to see a very big divergence in policy. We're already seeing it play out in the U.S. We're seeing a sharp divergence with Europe, which is likely to go ahead with quite a few rate cuts. In comparison, Japan, on the other end of the spectrum, is likely to hike, and they avoided this recent rate hike in support of further growth. They want to see that growth coming back because its growth trajectory has been very, very volatile. And, that also opens an opportunity of how investors play currencies and, equity markets, because they do open up tremendous amount of valuation gaps as well.
Anika, really great to catch up with you. Enjoy the rest of your week and your holidays. Again, wonderful to see you in person. That is Anika Gupta of Wisdom Tree. Okay, let's get now to some other stories that are trending on the terminal this morning. Nissan and Honda, they are agreeing to start talks to merge under a holding company. They say they plan to list it in August of 2026. Both the CEOs of the companies spoke about the future earlier this morning.
In order to work together, we need to benefit from the huge synergies. Otherwise, it wouldn't be meaningful in the eyes of the stakeholders. So that is why we agreed to start the discussion.
Once the definitive agreement is concluded, the holding company will be incorporated and be listed on the prime market of the Tokyo Stock Exchange, subject to obtaining necessary approvals from relevant authorities in resolution at each company's general meeting of the shareholders. The visibility of the timing is August 2026.
Chinese automakers' share of Europe's EV market dropped to 7.4% in November. That's the lowest since March. Over that period, new tariffs added as much as 35% to the cost of importing cars to the region. An EU investigation had concluded that state aid provided China's EV industry with an unfair advantage. Elon Musk has said that the Fed is, quote, absurdly overstaffed. Musk was responding to an ex-post by Chamath Palihapitiya, where the Social Capital co-founder described last week's Fed decision, detailing Powell's language about policy entering a new phase and the ensuing equity market sell-off. Okay, coming up, Panama's president rejects Donald Trump's threat over control of its canal. We're going to have the details for you coming up on your Bloomberg Brief on this Monday morning.
This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Half an hour dedicated to fixed income. Watch Bloomberg Real Yield. Context changes everything.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets. Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal?
Are markets too optimistic?
How do you worry about the things that are outside your control?
How does the current fighting completely stop?
I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
The fees being charged by Panama are ridiculous, highly unfair, especially knowing the extraordinary generosity that has been bestowed to Panama, I say very foolishly, by the United States. This complete ripoff of our country will immediately stop. It's going to stop.
Every square meter of the Panama Canal and its surroundings belongs to Panama and will continue to be. The sovereignty and the independence of our country are non-negotiable.
Panama's president responding against President-elect Trump's threat to reimpose U.S. control over the Panama Canal. After the response, Trump posted on Truth Social, writing, quote, "We'll see about that." Joining us now is Bloomberg's Bill Ferries. Bill, it speaks to a lot about the moment we're in, that Trump isn't even president yet, and he's upending global politics, not just in the big countries, but in Panama. I mean, Trump talking about the U.S. reasserting control of the Panama Canal would have a lot of people scratching their heads. What do we make of it?
Yeah, I mean, the treaty that ended U.S. control of the Panama Canal is almost 50 years old now. So Donald Trump is really stretching back in time to pick up this kind of a fight. I think what it tells us, though, and what it tells other governments and world leaders is that no matter what your relationship is with the U.S., whether you think you're on good terms or whether you're a rival like China, there's going to be a lot of turbulence coming your way, and you should have a plan B. We've seen countries like China already moving to limit exports of some critical minerals, for instance, to the United States so that they have leverage when trade talks presumably begin. We've seen similar things happening in Europe and even in Canada, where Prime Minister Justin Trudeau quickly flew down to Mar-a-Lago to talk about border security with Trump when he threatened 25% tariffs. So I think regardless of the relationship a country has with the U.S., things are going to change under Donald Trump, and it's going to be even on issues that you were never expecting.
How much does China play into this? Because part of what Trump was talking about was China's influence in the Panama Canal. Is this also on notice for all the countries that have very large Chinese presence, be it through debt, be it through other investments, that they might get the wrath of a president-elect Donald Trump?
Yeah, I think he's going to be looking closely at the relationship different countries have with China. In this case, the Panamanian president is right. The Panama Canal is basically a politically neutral asset that largely benefits the United States, but really benefits global trade. There are Chinese companies that help manage a couple of the ports along the canal, but it is open to transit to ships of all nations. There have been fee increases along the canal, and that may be what is really getting after President-elect Trump right now. But he does look at. He's going to fixate on relationships with China. We also know from his first term that he looks at things like trade balances. Who does the U.S. have trade deficits with? Inevitably, in his first term, those countries came under scrutiny.
We also had Trump talking about not just Panama, but Elon Musk, saying it was a hoax, the idea that he would take over the presidency. But the fact that Trump is even talking about this, we had conversations on this show, this idea that one of the risks for Tesla, for example, would be that Trump tires of Elon Musk. Is there a sign here, if he's talking about this, he's aware of the conversations of Musk's influence, that there is some friction between these two?
I mean, there are obviously two men with very big egos and quite a bit of global influence. They've been spending an awful lot of time together, even before the election, and then particularly after the election down at Mar-a-Lago. They did not get along very well in Donald Trump's first term as president. Elon Musk famously quit one of these CEO advisory boards that he had been named to. So I think it's fair to ask how long the relationship lasts, who is having the most influence on that. I think last week when we saw when the U.S. was headed towards this potential government shutdown, Elon Musk was really the one who came out against that initial deal, the bipartisan deal, and then you saw Donald Trump and Vice President-elect J.D. Vance putting out a statement. So I think that just leaves a lot of people wondering how long this relationship can possibly last.
Bill, just quickly here, we also have the new Trump for the head council of economic advisors, Stephen Miran. What do we know about him? What does this signify about those who are going to be leading economic policy under Trump?
Well, Miran was a deputy official in Trump's first term at the Treasury Department. I think most interestingly, going forward, he was a co-author of a paper that basically accused the Treasury Department and Janet Yellen of kind of manipulating how they went about T-bill and bond sales recently over the last year to try to supposedly try to goose the economy to benefit Joe Biden. That's a report that was kind of rejected by both Treasury and a lot of more mainstream economists, but it does show that there's going to be a lot of questioning about how the Treasury goes about its sales and what Trump may take an interest in when it comes to things like the deficit and even the Federal Reserve, I think, going forward.
Yeah, I know there was a lot of excitement around Miran that he is a strong voice to enter the Economic Council. Bill, thank you so much. Bloomberg's Bill Ferries. Coming up, drug maker Novo Nordisk stages a partial recovery, but that was after its biggest slump in more than 2 decades on Friday. More on that next. This is Bloomberg.
Behind the bright lights and adrenaline of pro sports is an equally exciting world of negotiations and deal-making.
That's what we cover each week on our podcast, The Deal.
I love the fact that you have, we say the cojones, but I can't say that in Bloomberg.
Maybe moxie?
Yeah, moxie. I'm Alex Rodriguez, former baseball player turned business executive.
And I'm Jason Kelly, a journalist at Bloomberg. Over the next couple months, we'll hear from all-stars like Billie Jean King.
Well, what should I learn? What should I do? I said, learn the business.
Jay Williams.
You're the asset, but how do you become the principal?
Paul Rabel.
We're going to be the league of digital, and that's why you're going to invest.
Adina Friedman.
I definitely am competitive.
David Rubenstein.
People don't come up to me on the street and say, let's talk about this private equity deal you did recently. Nobody does that. They say, let's talk about the team.
And so many more.
You need a clap?
No, I never.
Ready? Go.
As we spend some time here on the broader presidential race,
let's focus in on European politics.
Makes you wonder how politics might play out.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Welcome back to your Bloomberg Brief. I'm Danny Berger in London this morning. Time now for your front page news. Let's give you a look at what's making headlines around the world. First up, Bloomberg has this, that Prime Minister Benjamin Netanyahu said Israel will act forcefully against the Houthis. Over the weekend, a missile fired from Yemen struck Tel Aviv. He called on Israeli citizens to be patient, saying that it may take time. Next up on the Wall Street Journal, they're reporting on the White House's behind-the-scenes efforts to calm the drone frenzy. Biden called the Pentagon 4 times seeking information and was told the military had found nothing unusual. He had finally spoken out about it on December 17th, suggesting it was a non-event spurred by rumors and misinformation. And the AP leads with France unable to announce a new government before this evening. That's because of a day of mourning for the victims of a cyclone disaster in the Indian Ocean, the least said. Francois Bayrou, who was appointed prime minister, is aiming to name a new government by Christmas. And we're also keeping an eye on Novo Nordisk. Shares are moving higher this morning, but that came after Friday's session, where it fell the most on record. Novo's experimental obesity shot, CagriSema, helped patients lose an average of 20.4% of their weight over 68 weeks. That is short of the 25% weight loss the Danish drug maker had repeatedly predicted. Novo is Europe's biggest company by market cap, and all of this means that it's set to end the year deep into the red, down more than 8.5%. Joining us now is Sanne Voss in Copenhagen. Sanne, the numbers are astounding. $120 billion, what was wiped off of Novo Nordisk's market cap on Friday. Is this darling of the equity market, is it losing its shine?
I mean, that's probably still too early to say. We did see the share recover a little bit on Friday and is up again on Monday. But there's no doubt that there has been very high expectations for Novo Nordisk, almost too high. And Novo is feeling that now. The company was really, it's really counting on this new drug, CagriSema, to position it as a leader in the market, the massive market for weight loss drugs. And the trial results on Friday, well, they disappointed investors, and that is why we saw a major sell-off on Friday. And the problem for Novo was that it had promised too much. It had been out saying ahead of the trial that it could deliver a 25% weight loss, and it fell short of that. It had just been too confident.
It has a lot of competition at this moment, and especially in this new area of having a weight loss shot and having different various obesity drugs, because so many more people are on the scene. So what does it mean for CagriSema? Again, 20%, most people would look at that and say, that's a good result. What does it mean for them to have disappointed?
Yeah, I mean, Novo Nordisk is still, they say they're encouraged by the results and they still intend to launch it on the market in 2026. And we are still waiting for more details about the trial that will be crucial in kind of assessing the effectiveness of this drug. For example, Novo allowed its patients to, if they wanted to remain on a lower dose of CagriSema rather than stepping up to the high dose. And a lot of patients did that. So the big question mark now is, why did they do that? Is that because of side effects, in which case that's obviously not good news for Novo, but it could also be that they were simply just happy with a slower weight loss, and then that's a much more positive story. So we'll know more details about that probably next year.
Sanne, appreciate it. Sanne Voss in Copenhagen on the latest on Novo. Coming up, we're going to catch up with JP Morgan's Ian Steely as he looks outside the U.S. for duration. He's going to join us on the show next with a quiet equity and bond market in this holiday shortened and light week. Your equity future session up 0.2%. This is Bloomberg.
also an owner, I should have pointed out, of 3 major sports teams.
That's right.
And you're the first woman, as I understand it, the first woman to own 3 major, have stake in 3 major sports teams. Is that right?
Yes, and we'll say African American.
You were approached by the owner then of the, I guess, the Washington Wizards and the Washington Caps about maybe buying the Washington Mystics, which is the women's basketball team. And what did you say?
Well, first of all, it was Abe Pollin. He did come to me and Susan O'Malley, and they said, Abe Pollin says, look, I want you to be the face of the Washington Mystics. And I said, what do you mean be the face of? He says, I want you to buy this team. His health was failing. And I have to tell you, and a lot of women can understand this, we never get these opportunities. So that was the first thing that struck me, and I was flattered. I was really flattered. I said, well, Abe, what are the financials on this? And he handed them to me. He says, well, they're not making money. But I was still intrigued about team ownership.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia trade.
You're watching the close. Welcome to Balance of Power.
This is Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Welcome to your Bloomberg Brief. Danny Berger here in London. Let's set your agenda. Global politicians on notice. President-elect Trump threatens to regain control of the Panama Canal. It's a deal Nissan and Honda plan to merge to create the world's #3 automaker. And in a year that's upended the bond bulls and the stock bears, markets enter their final stretch in a holiday-shortened week. And it's pretty calm with volumes pretty low. Equity futures are rebounding, save for the Russell 2000, which is flat. That's after a good day on Friday, after a week that had its biggest decline in about a month after a more hawkish Fed. NASDAQ 100 futures lead the push higher, up 0.4%. For this bond market, little change this morning. At one point last week, yields had reached the highest level since May. We were spared the drama of a government shutdown, but we will get auctions this week, including $69 billion of 2-year notes. Pressure on duration this morning, 10-year yields and 30-year yields up more than 1 basis point. On that point about duration, JP Morgan's Ian Steely looks ahead to next year, writing this. With uncertainty around the outlook for 2025 undoubtedly elevated, we prefer to stay closer to home on U.S. duration and look elsewhere. We prefer government duration in Europe and Australia relative to the U.S. Pleased to say that Ian joins us now. He is International CIO of Fixed Income at JP Morgan Asset Management. Ian, wonderful to see you. And I think you approached us with a lot of humility. We were talking about this in the break, that everybody's call at this time last year just was completely wrong. So in that uncertainty, what do you grab onto? What is your protection in this time in this bond market?
I think you still, as you pointed out at the beginning, there's opportunities in the bond market. The yields are, I think attractive. If you look at yields relative to where they've been over the last couple of decades, we're still very high on the core side. Yes, it's a bit more challenged in the US, given we just don't know what's going to happen with the Trump administration and with the policies that are going to go forward. But duration is available outside of the US. We saw the UK GDP data this morning going nowhere. We've seen the Eurozone obviously struggling. The RBA seems to have changed their tone a little bit. And then just the all-in yield, it does offer you that protection if things go wrong. We saw it in August, 6% decline in stocks, and suddenly the US ag's up 1.5% because bonds doing what they should be, providing that diversification. So I don't think it's all doom and gloom for the bond market.
Is there anything that would make you more bullish on US duration, that would make it more attractive?
I think if you started to see the employment picture continue to, or saw that softening continue, I also think what we heard from Jerome Powell and the press conference and the statement last week was that inflation is back on the agenda. Obviously, PCE on Friday was a little bit more helpful for that narrative. I think if you started to see inflation come down again, there's still the two drivers, growth and inflation. If they start to soften off before you get these fiscal policies come through, then the Fed can go further. I think what they're saying at the moment is they've done a lot. They've done 100 basis points. Let's just see if that is the recalibration the economy needs, or if they need to go more, they will do.
You make it sound so simple, Ian, and I love that. But there have been complaints that the Fed is making it maybe needlessly complicated. This argument in particular comes from Mohamed El-Erian. He had an FT op-ed this morning that he wrote. I just want to read this one portion to you and get your thoughts on it. He wrote that market participants were right to feel uncomfortable listening to Wednesday's press conference. In addition to speculating on the significance of the Fed's latest flip-flop, they should also embrace a more basic reality. The continuation of the central bank's excessive data dependence increases uncertainties in the U.S. Again, saying that they've gone back to data hyper-dependence, and that's a bad thing for the economy and market participants. Just what do you make of that? Your first reaction?
I think the issue that we've got, you're absolutely right. So it does feel like they would like to be dependent on all the data looking forward. They seem to be dependent very much on sort of data by data and what's actually coming through. I think they are actually in a tough position at the moment. They don't know what's going to happen next year. They don't know the sequencing. They don't know the actual events. They don't know the impact it's going to have on the economy. And actually, the data's done a bit better than they thought it was going to. And if you look at just the forecast for 2024, they've had to revise up growth. They've had to revise up inflation. It's calling into question like, how much further they need to go. And they have addressed that to some extent. I think the questions will be asked is, did they have to go as far as they've gone? But they think they're restrictive. They still think they're in restrictive territory. There was a bit of a flip-flop around the communication about taking down from very restrictive levels or a lot less restrictive and then still meaningfully restrictive. So let's see how they are. I just think there's a lot of uncertainty as we move into next year.
Well, I was going to say, it seemed like this very two-sided Powell of having to explain why disinflation is remaining on track, but why they're not going to be cutting as much, about why the jobs market isn't a source of inflation, but why it's also strong. It is really this like two-sided risk that the Fed is dealing with. And with all of that, it's that Powell saying that they're in a new phase. What did you make of that? What is the new phase for the Fed?
Well, the new phase is they've done this recalibration. They've taken rates down by 100. They believe they were very restrictive. They've now got it down to, let's say, the top end of what maybe neutral is. I mean, again, no one really knows what neutral is. It's probably a little bit higher than what the Fed's predicting. Are we there now? And then what happens next year? Do we just get policies that are stimulus to the economy, and the economy seems to be doing fine? Do we get policies that are inflationary? Does the Fed have to kind of call into question whether it continues to go? So I think what we've heard from Powell and then speakers since is that we're just going to have to take our time. We're going to have to see how the data plays out and then what the administration puts into play. And for me, that means pausing in January at the meeting, and then you're talking March time, and maybe a bit more of an understanding of what's going to happen.
The volatility we see around that, does that mean that duration needs to have a higher term premium just because of that volatility? That, again, sort of the band that we're oscillating in, as you write, it gets wider. Does that mean that you should be demanding more yield in the longer end? Is that kind of one of the reasons why we've seen duration do what it has over the past few months?
I think we have seen the curve steepen back up, and I think people are now kind of demanding a little bit more premium. So term premium has increased, still probably not to the levels that some people would like it to see, but I think that all-in yield argument comes back. We're talking 4.5%. That is a reasonably high all-in yield, particularly if inflation is moving down and maybe it's not hitting 2%, but even if you're talking 2.5% to 3%, you're still getting really attractive real yields. And I always think that benefit of fixed income is not just the yield, it's that diversification, it's the ability to get capital gains if things go wrong. I still think that's really important, and treasuries are still the flight to quality bond market.
I have to say, though, Ian, reinvestment risk was talked about so much in 2024, that the cutting cycle is coming and you need to get further out on the curve because you're going to miss when a rally happens in this bond market and yields finally do come down. But the Fed has been cutting and yields have moved higher by something like 80 basis points. It's the biggest move higher in 10-year yields over 3 months since the cutting cycle began. What does that do to client sentiment, to saying you should be in a bond market, but the Fed has been cutting and bonds haven't been cooperating as you'd expect them to?
Yeah, I think that's a challenge as well, because if you think about it, at the beginning of this year, we were at seven cuts or so, and then I think we were in April, and there was debate as to should we be hiking again, then we're back at six cuts late July, in August, and as we were thinking about that, and then obviously since they did cut the sort of the oversized 50, we've had that rebound. The data's just got a bit better. So this is what the Fed's dealing with. It's dealing with a very volatile market pricing on top of what they're actually trying to forecast and predict. So I do think that does create a challenge. The good news is, though, if you look at where cash rates are, the 10-year yield is above cash rates. First time we've seen that in a couple of years. So suddenly the argument of moving out of cash into bonds, which a lot of people were challenged with because they were effectively, at least if you were moving into government space, you were giving up yield. That's not the case anymore. And then if you put on some credit spread and you can build up a portfolio of high quality bonds, well north of 5%, but even pushing towards 6%, that's a reasonable pickup relative to cash these days. So I still think that argument of locking those yields in is probably even more powerful today than it was earlier this year.
We need some good news. You're talking about volatility for 2025, reminding us how crazy 2024 was. So I hope we get some bit of calm for 2025. Ian, thank you so much for joining. Really great to see you. Enjoy your holidays. That is Ian Steely of JP Morgan Asset Management. Coming up on the show, Honda and Nissan take their first steps towards a historic merger. We're going to bring you the details on your brief coming up.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
In case you missed it, on Bloomberg, the China show.
What's been the sentiment? What's been the reaction to this U.S. election outcome on the ground?
They were pretty much ready for Donald Trump. There was a high expectation that he could return to the White House.
We have dealt with him before, and after quite a few years, China simply is better prepared, and China, psychologically speaking, is much more prepared in dealing with him again.
Probably are fully prepared for Trump to impose higher tariffs on China.
What's the tone as they were talking to really a global investment?
Right. The openness of China, including the capital markets, Hong Kong being an international financial center, will be extremely important in channeling global investors.
Don't miss the China Show live every weekday.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Nissan and Honda have agreed to start talks to merge under a holding company, which they plan to list in August 2026. Both CEOs spoke about the future earlier today.
In order to work together, we need to benefit from the huge synergies. Otherwise, it wouldn't be meaningful in the eyes of the stakeholders. So that is why we agreed to start the discussion.
Once the definitive agreement is concluded, the holding company will be incorporated and be listed on the prime market of the Tokyo Stock Exchange, subject to obtaining necessary approvals from relevant authorities in resolution at each company's general meeting of the shareholders. The visibility of the timing is August 2026.
Bloomberg Global Autos editor Craig Trudell joins me now. Craig, great to see you. So maybe some big questions going into this press conference. What did we get answers to? What is still unknown about this merger?
Yeah, this really sort of started, coming together last week, or at least, to the point where it started to get reported, and it was really unclear what exactly the plan was. Were they just going to try and do a small sort of cross-shareholding together, which we've seen, across Japan for many years? Would they try and just do more of a Renault-Nissan style alliance where, they don't necessarily fully come together, but work together on joint projects? This idea of a holding company seems much more dramatic in terms of, one listed company instead of two, one in which Honda will have the upper hand for the obvious reasons of them being, worth, after all, about 3 times more than Nissan is at this point. This really looks like a Honda rescue of Nissan as opposed to a merger.
But as you kind of hinted there have been instances where giant car companies try to come together and it doesn't work, whether it's Nissan and Renault or Daimler and Chrysler. Can it work this time?
I think it's really going to be tricky here because we had Carlos Ghosn on BTV just last week that I would encourage viewers to go back and take a look at that, where he talked about this idea that these two companies operate in a lot of the same markets. They do have some strengths, to give them some credit, but they have some sort of common weaknesses. I think they're both really behind in terms of the transition to fully electric vehicles. There's definitely some, strengths in terms of hybrids, which is not for nothing. But this is also an issue of Nissan really being just in a really sort of challenged state. And so my question here is sort of what's in it for Honda, right? And, I do think that may be, in the end, something that's difficult for them to, sort of make a case to their shareholders that this is in their best interest.
You look around the world, and it's a challenged state for a lot of car makers. VW, Europe's auto industry in general, but VW also has this added layer of labor disputes. They reached a deal over the weekend. What was it? What does it look like now?
Yeah, so this was a case of management making the case for months now that they really needed to make massive changes to their operations in Germany, that they maybe needed to even close 3 plants, which really would have been unprecedented. Unfortunately, I guess if you would ask some shareholders and analysts, they weren't able to set that precedent. And so we instead got yet another can kicked down the road moment for them, where they did manage to make some sort of technical reductions in capacity, but plants are not closing. There's real questions about how many job cuts are really going to be just a matter of workers that were going to retiring in the next few years. So I think, the likelihood that we end up continuing to talk about VW needing to make more structural changes really drags on into 2025.
Yeah, again, all these car makers, lots of big changes to come as they compete with China. Craig, thank you so much. Bloomberg's Craig Trudell. To politics now. Panama's president has rejected U.S. President-elect Trump's threat to reimpose U.S. control over the Panama Canal.
The fees being charged by Panama are ridiculous, highly unfair, especially knowing the extraordinary generosity that has been bestowed to Panama, I say very foolishly, by the United States. This complete ripoff of our country will immediately stop. It's going to stop.
Every square meter of the Panama Canal and its surroundings belongs to Panama and will continue to be. The sovereignty and the independence of our country are non-negotiable.
Let's get over to Bloomberg's Mike Shepard, who joins us now from Washington. Shep, the fact Trump is even talking about the Panama Canal, he's talking about it in some force, and he's not even president yet. Why are we having this conversation? What does it tell us about Trump's approach to foreign policy? Again, something that some people would say is kind of a niche issue to bring up forcefully in front of a large audience.
Niche issue is one way to put it. It wasn't really on anybody's bingo card heading into the holiday weekend. It's unclear what set Trump off to make him fixate on the Panama Canal this weekend. First, in a Truth Social post on his social media network, and then at this appearance yesterday in Phoenix. But something does have his attention about it, and he is focusing on the rates charged there, and he's also insinuated the possible growing role of China, which operates and owns 2 ports near the canal. But the canal, under a long negotiated treaty with the United States, after the U.S. has ceded control of the passageway to the government of Panama, there's really no legal pathway for the U.S. to, in any way, shape, or form, take it back, as Trump has hinted at. But the Trump playbook is this, really, that he will confront an ally or an adversary with some claim like the one we are seeing made, and then he will put that individual leader or that nation in a position where they have to negotiate something with him. And in this case, Trump could also wield the tariffs threat. It's something he has already waved against the largest U.S. trading partners, Mexico, Canada, and China. And perhaps it could be invoked here, too, to try to get something out of the government of President Jose Molina, who is rejecting any threat to his country's sovereignty there. But it could be an opening to perhaps getting some rates lowered and allowing Trump to declare victory as soon as he takes office. It's a playbook we've seen him use with leaders in Europe as well when it comes to Ukraine. And he even yesterday, during his remarks in Phoenix, said that he had heard that President Vladimir Putin of Russia was willing to meet with him and eager to meet with him soon. So he is really trying to set the agenda even before he takes office.
It's a reminder of the volatility of the first Trump presidency. And we also got that in what happened over the past 4 days, the threat of a government shutdown led by efforts of Trump and Elon Musk, even though it was resolved, Shep. Is it a moment to retake stock, to say he's not even president yet, there is volatility, and maybe some of the good stuff that this market is pricing in, the various priorities, are going to be a harder and a more bumpy road to accomplish?
Well, I'm glad you brought it up that way, Danny, because there is really a connection with all of this and the way that Wall Street and a lot of others in the business community have viewed the incoming administration. Right after the election, there was a lot of hope among investors and business people and corporate leaders that maybe this time around Trump would be a little bit more nuanced, a little bit easier to work with, and that maybe some of the harder edges from the first time around have worn off. But we're seeing again, the elbows up approach. We're seeing again that he is not afraid to really push the envelope in dealing with foreign leaders and perhaps business leaders as well, as we may find out. So this is something that we have to take into account as he is preparing to take office in a month, that a lot of these threats when it comes to the border and promises on tariffs and other things, they may come to pass as he is framing them, and it will fall to his administration to try to defend them with some of the economic interests out there that could be hurt. For instance, we know that tariffs will have, based on economic research, a negative effect on businesses and consumers here in the U.S., and how that effect is felt will depend on the scope of those tariffs. So we'll have to see what happens there.
Shep, really great to get your thoughts this morning. Bloomberg's Mike Shepard there. Thanks for getting up early for us. We're also keeping our eye on Amazon today. This week, warehouse workers in New York City are expanding union strikes, demanding higher pay. Teamsters posted on X, quote, "On the roads, in the warehouses, in the air hubs, the Teamsters Union will organize every Amazon worker and ensure workers at one of the world's richest companies finally get paid what they deserve." Joining us now is Bloomberg's Clara Hernandez Lizarraga. Clara, it's not just New York, it's Atlanta, it's San Francisco. What does this mean for Amazon in the middle of the holiday period when everyone's rushing to get their last-minute gifts?
Yeah, well, workers know the Christmas season is a critical time for Amazon, and they've timed their action to generate maximum attention just as shoppers are making their final Christmas purchases. The workers went on strike in a handful of U.S. cities in an attempt to force the company into the negotiating table to sign a better contract with the union. So far, more than 7 delivery stations have been targeted with walkouts and picketing since Thursday. And things seem to have been escalating with, as you said, workers at the company's sole unionized warehouse in New York, Staten Island, joining the strike on Saturday night. The labor union, the Teamsters, also has said that workers in San Bernardino, the Cargo Hub, were also joining the strike on Saturday.
And it's not just Amazon that's having holiday strikes. It's Starbucks, too. Denver, Pittsburgh, Columbus, Ohio, joining in with Chicago, Los Angeles, and Seattle. Starbucks has seemed to say that it's a small disruption, but Starbucks has already been struggling, this company in general, having to bring a new CEO in earlier this year. What does their strategy look like with these various unions, and what does it mean for them?
Well, the strikes in the case of Starbucks fell through while negotiations were ongoing, and the unions say that the company has failed to honor a commitment to reach an agreement by year end. So far, nearly 50 stores have been shut, but things could expand because the strikes are expected to last until Christmas Eve. And yeah, we've seen new cities join today in Boston, Dallas, and Portland are expected to join today.
Clara, thank you. That is Bloomberg's Clara Hernandez-Lizraga. Coming up, we'll set you up for your holiday shortened week ahead on Bloomberg Brief.
Countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have Take-Two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, only on Bloomberg. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at the Forbidden City in Beijing, and this is Bloomberg.
Let's get you set up for your trading week today. We're going to get U.S. new home sales and consumer confidence. That will come at 10 a.m. Eastern. On Tuesday, both equity and bond markets will be closing early ahead of the holiday. And then on Wednesday, you get your much-deserved break. Markets will indeed be closed for Christmas Day. In the meantime, with light volumes, we are looking at yields moving higher. At 1 point, yields last week hitting their highest since May, up 1 basis point. That is it for your brief surveillance. We'll take it from here.
in 2000, post-Napster, generally everybody wrote off the recorded music industry, including the investment community. And I didn't mind that chapter because then I got left alone. And actually, I think out of that period, we started to create better art because the pressure wasn't on from the technology to be the most powerful chapter. And then iTunes came in, and iTunes, to Apple's credit, did have a boutique taste mentality about the store, which meant that I think they understood. I can tell you from that period that the artists that came through were of a very high quality because it was encouraged to be boutique. Now, ironically, this chapter has made us more money times 5 than the iTunes chapter and the post-Napster chapter. But an algorithm tells you what you want, not what you might like. And there's a difference between what you want, but with streaming, the downside is you have incredible penetration, and we have hundreds of millions of people around the world. And so that has been very lucrative as a business.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Rio de Janeiro, Brazil, and this is Bloomberg.
Data on inflation have been coming in a little slower. I wouldn't even say sticky or stalled. I would say the progress is just slowed.
The Fed has to reiterate its commitment to its inflation target.
I think the market at every step has been worried about inflation and has been rejecting these moves by having yields go up.
It's really about the bond market. So effectively, where people are starting to get nervous is from a positioning standpoint.
Big question to me would be how high can these yields actually go?
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
From New York City, good morning for audience worldwide. This is Bloomberg Surveillance. Alongside Scarlett Fu this morning, I'm Anne-Marie Hordern. Scarlett, of course, John and Lisa, starting their holiday. We have the shortened week, but it's the final full week of 2024. And really, markets this morning, shortened week, kind of boring. No action.
Kind of boring because most of the big event risk has been removed, right? There is no government shutdown. That was resolved late Friday night. And the data that came in on Friday showing inflation was fairly subdued, also encouraged investors. So the picture right now for futures is pretty mixed, but I would expect that there would be a lot of window dressing, a lot of people buying the best performers of the year to close out the year.
How much are people actually also now preparing for potentially higher for longer rates of 2025 following the Fed, and also just recalibrating what 2025 will mean in terms of policy? We do have, though, M&A Monday, a big news coming out of Japan when it comes to Honda and Nissan. We are talking about now the third biggest auto manufacturer, these two companies combining by sales. Yeah. How much of this is just preparing for the tough road ahead?
It's remarkable, the kind of numbers we're talking about here, because Honda will also buy back $7 billion of its own shares. You're seeing Honda shares moving higher in the pre-market. Those are the ADRs by 16.5%. Right now, it's a basic agreement for merger talks. They did hold a joint media briefing, and nothing's going to be really done until this new entity that will be listed by August 2026. So there's a lot of time for things to maybe go awry or a lot of details still to be ironed out.
The former leader of Nissan spoke to Manus Cranny last week, Carlos Ghosn, and this is what he had to say. He called it a desperate move by Nissan. He said it's not a pragmatic deal. Synergies between the two companies are difficult to find. The brands are similar, but for Nissan, this is a desperate move. Marry for short-term problems putting these two companies together. For Honda, it's really about a long-term vision. They can get bigger doing this, and I think they have more control of the board, so they're really in the driver's seat.
Well, they're not in the financial straits that Nissan is, and I loved what Carlos Ghosn said about how this deal lacks industrial logic and is probably a result of political pressure. We know the Ministry of Transportation or Industry Ministry has been pushing for a similar deal about 5 years ago that never came to pass, but this time around, Nissan is in a much weaker position, and it has perhaps no choice but to consider it.
I just wonder how many more we're going to see of these, especially when you look at what's going on in Germany and all of these just Chinese auto manufacturing companies coming out, can produce these cars cheaper, and it's a big story that's going to be for 2025. Coming in this program, Michael O'Rourke of Jones Trading with stocks snapping a 3-day losing streak. Bloomberg's Mike Shepard as Trump threatens to retake control of the Panama Canal. And Amrita Sen of Energy Aspects on her outlook for the oil market in 2025. We begin this hour with stocks rising as traders boost Fed rate cut bets after cooler inflation data. Michael O'Rourke of Jones Trading is cautious, writing not only are stocks expensive in their own right, but they are also at the most expensive levels versus treasuries in 22 years. Michael joins us now. Michael, good morning, and thank you so much for joining us on this holiday week. Merry Christmas and happy holidays to you and your family. So if you think stocks are very expensive now, what are you doing? Are you selling?
I think you just have to be more selective. The S&P 500 equal weight trades at a significant discount to the S&P 500. So of course that expensive nature within the S&P 500, it's all at the top end in the mega cap stocks. And I think obviously we've had a tremendous 2-year run here. We have a new presidential administration coming in. You can expect a lot of volatility. So there definitely are numerous value stocks out there in the market and places you can invest. You just have to be a lot more selective. And I'd be cautious about chasing the S&P 500 itself.
You talked about Trump in your note, and you said in the midst of the post-election euphoria, the equity market forgot that Trump is volatility bullish. Not only is Trump willing to break a few eggs to make an omelet, he will break a few extra simply because he can. Was the market reminded of that? Scarlett mentioned at the top of the show, we almost had a government shutdown. Was the market reminded of that last week?
I think it was, and I think people are starting to realize, well, a lot of the rally since the election has been this, we're going to cut spending, we're going to cut regulations, we're going to keep our tax cuts, and we're going to grow GDP. And, you go through this government shutdown or potential, we risk the government shutdown here. And you're like, you have to just remember there's a lot, it's not an easy path to achieve those goals. Those are great goals to try to achieve. I love it. It's ambitious and I hope we do achieve it, but it's Washington, D.C. You're not going to get there in a straight path, and the market shouldn't price all that in right away, which is essentially what we've started to do in the equity markets. And what you're seeing in the bond market here is it's not fully believing everything that the equity market is excited about, and that's why you see the 10-year yield up above 4.5%.
Well, speaking of the market pricing in a lot of positivity, I look at Tesla shares up about 67% since election day. Elon Musk has really been a tailwind for the overall market through Tesla mainly. At what point does he become a headwind for the market?
Well, that's the interesting aspect. One thing I find interesting is Elon Musk has numerous companies, most of them private. He can benefit from his relationship with President Trump through any of those ventures as well. So for everyone to just bet on Tesla, which, you were just talking about the automotive industry, there's a lot of challenges out there. It seems like a really aggressive, myopic bet. So, going forward, I think people, again, they need to be a little more pragmatic out there and realize Elon Musk is an influential guy. He's a powerful guy. But it does, Tesla is not necessarily going to be the biggest beneficiary of Trump's Musk's relationship with Trump. And as we know, sometimes, these relationships President Trump has, they go through rough periods. Mm-hmm. So again, it's really risky to just bet on one stock to expect this bromance to continue.
Well, you mentioned Tesla. Of course, it is the low-hanging fruit here when you're looking at who would benefit from the Trump trade. When it comes to pragmatic approaches to challenges, I think about what's going on with Honda and Nissan, and Anne-Marie brought this up earlier, this as an example of the M&A that we can expect. From where the market sits, from where you sit, is this a pragmatic deal that has positive ramifications for U.S. automakers?
I'm not an automotive industry expert, but I do agree with everything you both said about this is a deal coming out of weakness. And we know all the weakness that's going on in Germany. And of course, their auto industry is key there. So you're looking at a situation where there are a lot of challenges out there in this world. And again, you don't want to see companies making deals out of weakness, but it's clearly that's what's going on here. So you have to think there's some risk out there.
When you look at the biggest risks heading into next year, obviously the auto industry is one of them. What else is on the horizon?
I just think it's the overall enthusiasm for everything. We've had such a speculative market. Bloomberg has this great article about the wildest trades of 2024, and you see that whether it's the leveraged ETFs, some of these other speculative trades you're seeing out there, paying these significant premiums to net asset value to some of these stocks and ETFs out there. There's a lot of optimism built into this market right now, and it's not to say there's not things to be optimistic about. It's just when you start overpaying for them, you open yourself to this additional risk that if there's a bump in the road when you're priced for perfection, it can be pretty painful.
And the market right now is pricing in good policy from the incoming administration, this Trump trade. Yet we haven't seen any of that policy yet. His term will begin January 20th. Michael, how are you thinking about the sequencing of next year when it comes to things like immigration, tax cut, and tariffs?
Well, I mean, that's exactly what I'm talking about. It's, translating these policy goals to actual policy takes a lot longer than the market's obviously pricing at this point in time. Anyone remembers the first Trump administration? He loves to negotiate. He loves to drive a hard bargain. He loves to push his opponents to the other end of the table. So it's not going to be pretty in trying to achieve these goals. So I think that's a key thing that the market's risking. So when you think of the sequence of policies you talked about, it's going to take time for all that to play out. And again, the market's tried to price it all in here in the span of 2 months.
Mike, I'm thinking about what's going on in the Treasury market. And on the long end, we've really seen yields steadily rise over the last 2 weeks. And there was some relief on Friday, but it does look like yields are inching higher once again today, and that yield curve continues to steepen. How does that set us up for 2025? Or do you kind of dismiss what we're seeing in the final week here?
I don't dismiss what we're seeing in the final week here. I do think the 10-year yield is so important because so many instruments price off that, the market prices off that. I mean, right now, the S&P 500 earnings yield is about 50 or 60 basis points below the Treasury yields, as we mentioned earlier. And so you're talking about stocks are more expensive relative to your quote-unquote safe risk-free asset Treasuries than they've been in 22 years. That just, is an example of the speculative fervor out there in the equity market. What happens if we see this 10-year yield continue to rise and test 5%? Equities will undoubtedly see selling pressure if that happens. Right now, I think this is a little bit of a crisis of confidence in the Fed in the manner in which they reversed course last week. There's also a little bit, obviously concerns about inflation upticking again and concerns about President Trump having inflationary policies. So if we see this 10-year yield continue to rise, you're going to feel that reverberate throughout all financial markets. So it's something we want to see stabilize here.
Yeah. What would be the catalyst that would send that 10-year yield to 5%?
Well, I think it's everything we've seen. Like you had the Fed last week, conclude a 100, basis point easing cycle while increasing their inflation forecast for the next 2 years. Basically, according to the forecast they released Wednesday, we'll run for above target, above its inflation target for 6 years, which seems kind of ridiculous to be cutting rates when you're doing that. So that's one issue. Obviously, depending on how all these Trump policies play out, everyone's concerned that they're going to drive inflation, and that's a lingering fear. So treasuries have really been weak, acted poorly since just before the election. This was just the latest round of the sell-off, and like I said, we need to see them stabilize. If they do push up to 5%, the S&P 500 is going to have significant pressure on it.
Michael, what's your base case for next year in terms of Fed cuts?
I think, I'm going to go with the forecast at 50 basis points at this point. Although the Fed seems to change it every quarter. But I think we have a very strong economy. I'm surprised they cut rates as they did. GDP for this quarter is tracking 3%. GDP last quarter was 3%. When you think about the high rate environment the past 2 years, it has not slowed the economy. So when the Fed keeps saying we're restrictive, I'm not seeing it. You're not seeing the unemployment rate. It's 4.2%. which is basically at the Fed's long-run target. So it's really hard to predict what the Fed's going to do because they keep moving their policy goals around, and it doesn't seem to be tied to the movements within the economy.
So higher for longer in 2025. Michael O'Rourke of Jones Trading, thank you so much for joining us. Happy holidays and New Year to you. Let's get you an update on stories elsewhere, what else we're watching this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, Anne-Marie. The fight over spending in Washington is put on hold for another 3 months. President Biden has signed the stopgap bill that keeps the government running until mid-March. But the new law does not include a suspension of the debt ceiling that President-elect Trump demanded at the last minute. Republicans had abandoned an earlier bipartisan deal under pressure from both Trump and Elon Musk. Chinese automakers' share of Europe's EV market dropped to 7.4% in November. That is the lowest level since March. Over that period, new tariffs were added after an EU investigation concluded that state aid provided China's EV industry with an unfair advantage. The tariffs added as much as 35% to the cost of importing cars. Meanwhile, Apple is considering a challenge to Amazon's Ring. The company is working on a smart doorbell that will have advanced facial recognition that wirelessly connects to a deadbolt lock. The idea being that the doorbell could automatically unlock the door for a home's resident just by scanning their face, just like Apple ID, letting them into their iPhone. And that's your brief. Anne-Marie.
Thank you so much, Danny. So, Scarlett, it's basically like Face ID, but Home ID?
In a manner of speaking, yeah. This is a way for Apple to really expand that franchise of Face ID, but also to get more people to pay to subscribe to iCloud, which is a huge moneymaker.
Right, and I feel like Amazon's already ahead of them on this.
Oh, they are, right? I mean, Google and Amazon have been leading the way in terms of smart homes, and Apple's kind of playing catch-up.
Catch-up, exactly. All right, more on that later. Up next on the program, Trump's demands for Panama.
The fees being charged by Panama are ridiculous, highly unfair, especially knowing the extraordinary generosity that has been bestowed to Panama.
A lot of political fights already. It's not even January 20th. You're watching Bloomberg Surveillance. More on that coming up next.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
Always on the heartbeat of the tech
spread across global markets.
The real-time data aspect is going to be important.
We're going to bring you expert analysis on that. Sure. Don't miss Bloomberg's interview with the
Welcome back to Bloomberg Surveillance. It is holiday week. Merry Christmas, just around the corner. This is the last full week of trading of the year, and you just see that S&P 500 futures flat. They were higher this morning, so now we're in the red, red and green on par for Christmas this week. Euro taking another dip lower, now below 1.04. So many people, Scarlett, say actually Analysts are saying next year, if the wall's going up, we could see parity.
I know. I've been reading about that a lot. And of course, you had France with the political uncertainty there, and now Germany. So it's a little bit of a pylon. Dollar exceptionalism continues.
And New York crude under $70 a barrel. We're going to be speaking to Amrita Sen on her outlook for 2025. Under surveillance this morning, Trump's demands for Panama.
The fees being charged by Panama are ridiculous, highly unfair, especially knowing the extraordinary generosity that has been bestowed to Panama, I say very foolishly, by the United States. This complete ripoff of our country will immediately stop. It's going to stop.
Here's the latest. Panama's president, Jose Raul Molina, is rebuffing President-elect Donald Trump's threat to reimpose U.S. control over the Panama Canal. Bloomberg's Mike Shepard joins us now for more. Mike, we feel like President-elect Trump is already having all these political fights before January 20th. Panama, Canada, Mexico, China, Greenland. Some of these we've already also seen the first iteration of Trump. Is he going to get anything out of any of these?
That's a good question. This is the Trump playbook. He offered Greenland as an idea during his first presidency. Hey, how about we buy this? And it was resoundingly rejected, of course, by Denmark at the time. And again, being very coolly received at best by the Danish government already. He'll put these ideas out there because they're on his mind, because he wants to keep people on their toes. And we saw this, of course, right at the start, not long after he won the election, with the challenge to Mexico, Canada, and China, the three largest U.S. trading partners, over the flow of migrants and drugs into the U.S. over the southern and northern borders. And he has already seen some effects from that. For instance, in Mexico, the crackdown is underway. President Claudia Sheinbaum there has reached out to Trump, spoken to him by phone. They had what both leaders called a productive conversation, and her government is trying to take some steps to address those concerns. Likewise, we've seen Prime Minister Justin Trudeau try to do the same thing on the border, even though the border really isn't nearly as much of an issue between the U.S. and Canada. But at the same time, he is paying a political price at home, and some of the threats on tariffs have really upset his coalition, caused some difficulties there. And then there's China. We see China moving to shore up its economy ahead of a potential trade war with the U.S. So we see lots of different countries responding in different ways already to Trump, and he hasn't even taken office yet.
He also talked about TikTok over the weekend, and he said, we did go on TikTok. We had a great response with billions of views. He then goes on to say, they brought me a chart. I'm guessing this is his team. And I looked at it and I said, maybe we've got to keep this sucker around for a little while. Now, TikTok is facing down this January 19th ban. What does it mean when the president-elect says he wants to keep the app around for a little bit longer?
Well, it does create the suggestion or the prospect that he may try to do something to perhaps slow enforcement or do something administratively to try to allow the app to continue operating in the U.S. However, there's a huge however there, Emery, and that is that there is a law passed by Congress, signed by the current president, passed by Congress, I will say, by a wide margin, with bipartisan support, that the app must be sold by its Chinese owners. Otherwise, it will be banned. The China-based company ByteDance does not want to let go of TikTok. It is a lucrative venture for them. And they also say that it would be very difficult to separate the algorithm that makes TikTok so valuable for it to be sold very easily. So this will be a tough problem for Trump and his team to try to solve if they choose to take it on. Now, TikTok does have one last chance, and that is at the Supreme Court. They are trying to overturn this law, as you know, and they have arguments scheduled on January 10th before the High Court in really a last-ditch legal effort to maybe change their fortunes.
Okay, so we have that to look ahead to in the new year. All of this invites the inevitable question, Mike. Where is Joe Biden, the current president and head of the White House right now? He's kind of absent in all of this. And I bring this up because I did see a headline on the Bloomberg terminal that says the Biden team is looking into investigating Chinese chips, which would then set up Trump for tariffs. I mean, it's an interesting move in that whatever they are doing, they know they can't get done right now in the remaining 30 so days, so they're kind of setting things up for the next White House.
That's right. And Scarlett, you bring up an interesting point about Biden. He has been ceding the stage in many ways to the incoming administration, perhaps more visibly than we've seen in other transitions. The last transition, of course, was quite rocky from Trump to Biden, with Trump essentially refusing almost to leave office and denying that he had lost the election, and then not really taking part in a lot of the official handover from his administration to the next one. So Biden is doing something a little bit different. He is, and of course, we have seen more and more his depleted state physically, and we have also seen how his priorities, we're seeing them take shape in the final days. He's pardoned his son, Hunter Biden, and he also does plan to meet one last time with Pope Francis at the Vatican. So he is making his priorities clear. One of those will perhaps be on the China front, as you said. They will try to launch this investigation if they can pull it off by the end. They have already put a lot of export controls to limit China's tech ambitions, especially in the area of developing and acquiring semiconductors, especially the advanced ones. And that will accrue to Trump's benefit and lay the groundwork for perhaps even tougher measures by Trump when he comes in.
Okay, so curtailing China's tech ambitions is one area on which the current White House and the incoming White House do agree. What else? What other issues, kind of fit that mold? What else could Joe Biden be teeing up Donald Trump for?
Well, one thing he could be teeing up very soon is the rejection of Nippon Steel's interest in acquiring U.S. steel. That is something both candidates really railed against during the presidential campaign. We know that President Joe Biden, who's a Pennsylvania native, very much opposed the sale to a foreign buyer of Pittsburgh-based U.S. steel. So it will be interesting to see how Trump responds to that and how quickly Biden moves. That will be one of the things we will see him try to take action on as he prepares to go out the door.
And this is one of those things, Mike, that they both agree on, that it should remain American-owned and U.S. hands. Bloomberg's Mike Shepard, thank you so much for joining us, and Merry Christmas to you and your family. Scarlett, you asked the best question. He is ceding the spotlight every single day.
Yeah.
The former president, who's already met with Emmanuel Macron, Volodymyr Zelensky, had countless calls with foreign leaders, and is already starting to shape potential trade concerns for 2025.
Yeah, Mar-a-Lago has become White House South even before his inauguration. And at every stage, it's clear that foreign leaders are thinking about how they're going to position themselves, how they're going to appeal to the incoming president.
One other issue that potentially we will see before this Biden White House leaves is sanctioning outright Russian crude. And that potentially could be a problem or a blessing for the incoming administration. Coming up in the program, speaking of crude, Amrita Sen of Energy Aspects on her outlook for the oil market in 2025. You're watching Bloomberg Surveillance on this Merry Christmas week. Good morning.
I've seen firsthand how some fashion businesses make women feel. And I think there's one thing, you know, being really vocal and being an Instagram activist and talking about something, there's a difference than putting your money where your mouth is and really trying to do something about the problem. And that's what I did with that business. It was about how do I take everything that I know and I've learned and actually do the opposite. And I think that as a young black female entrepreneur, the only thing that I could do was what I know from my experience. And the honest truth is, I didn't set out to create a company that was like deeply rooted in the principles of inclusivity and diversity. I set out to make a company that was right for me and my friends, and I knew that if I had a problem, chances are somebody else does. And I think that's where so many businesses are, you know, created, when you're solving a problem that's real for you and therefore real for the consumer.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Welcome to Bloomberg Surveillance. The last final week of 2024. All the action in the markets was really last week. This is just that purgatory. Christmas week, New Year's week. If you're in the office, thank you so much for tuning in. S&P 500 futures are now lower. Last week, S&P 500 closed in the red for the week. Potentially might get another down week this week, Scarlett, heading into the new year.
Yeah, but it doesn't change the fact that it's up about 25% so far this year. So I don't know that we can read too much into it. Anyone who is long equities this year, they're pretty happy.
Okay, let's take a look what's going on in the bond space. We did avoid a government shutdown. We were very much on the brink of that shutdown. You had federal government agencies actually preparing what would need to be done if these agencies were going to be shut. And this year, what we have, if we could bring up the board, U.S. 10-year yield, 4.53. We do have, at 1 p.m., Scarlett, a 2-year bond auction.
Yeah, and there's plenty of demand for treasuries at the short end of the curve. There's also a 3-month and 6-month auction at 10 a.m. this morning. We've been seeing a steepening yield curve. A lot of talk in the past couple of weeks about what and how far the 10-year yield can go up, right? 5%, T. Rowe Price talking about 6%, which, you know, seems a little high, but it's out there. And people are wondering whether this is something that's going to happen in 2025.
Yep, that's right. And in terms of what is going on in currencies, euro dollar this morning is below 1.04. Look at that, Scarlett. Pretty incredible. For 2024, the chart for me has just been this insatiable demand for U.S. dollar.
Yeah, the U.S. dollar has been on a real tear, up 7.1% if you look at the Bloomberg Dollar Index, near a 2-year high. It's only posted one down week since October. So that theme of American exceptionalism really reflected in the currency markets, technology leading the way, the economy growing faster than expected, unemployment being low, and of course, the incoming government being very, very pro-growth.
Right, and if you put tariffs up, that's only going to be stronger when it comes to the U.S. dollar, potentially weaker some of these other currencies. Under surveillance this morning, Israeli Prime Minister Benjamin Netanyahu vowing to act, quote, forcefully against the Houthis. This coming a day after a missile fired from Yemen struck Tel Aviv. Netanyahu calling on Israeli citizens to be patient, saying it may take time. So he's vowing to retaliate to this. Another interesting story also over the weekend from the Gulf involving the Houthis. There was some fire between the U.S. Defense Force and the Houthis, but during that, there was friendly fire, and 2 U.S. Navy pilots were shot down over the Red Sea. They were ejected. Thankfully, no one died in this incident, but you can just see what is going on with the fact that the Houthis still control the Red Sea.
Yeah, it's a reminder of the instability in the region. The U.S. has been targeting the Houthi rebels for over a year, and of course the Houthi militia, which is backed by Iran, control a big chunk of Yemen, which has been striking ships to disrupt those shipping lines. And to just bring it right back to Netanyahu, Netanyahu, of course, accusing the Houthis of threatening world shipping and the international order. So this is an ongoing story, shows no signs of clearing up.
No signs of clearing up, and they have been. And the U.S. military is there basically protecting the only vessels that are willing to go through the Red Sea, which at this point, I believe, are just Chinese and Russian vessels. Staying what's going on in politics, President-elect Donald Trump addressing concerns about the outsized role Elon Musk has had in his incoming administration. Trump saying Musk will not be taking over the presidency and calling such talks a, quote, hoax. Now, there's a lot of memes on X, which Elon Musk owns, about how it's President-elect Musk. A lot of Democrats are also really trying to play this up, trying to needle away at Trump. Trump had another funny comment to make and said, look, even if he wanted to be president, he can't, because he's not a U.S. citizen.
Yeah, and he added a ha-ha to all of that in the end. But it does raise an interesting question. It's something that we've all noticed, especially when you look at how Elon Musk's Tesla shares have performed since the election. Anything Elon Musk right now is huge. It's on fire. And this idea that he's kind of calling the shots, or at least being increasingly influential in national affairs. Just look at what happened with the almost government shutdown that we had, right? He was the one who got in the way and tweeted up a storm or posted on X saying that the Republicans should turn down and should vote down the Plan A, what ended up being Plan A.
He's also tweeted this morning, taking aim at not exactly Jay Powell, but at the Fed, saying the Fed has too many employees. And what matters now is why he tweets why we care is because he is now in charge of a task force that is looking at slimming the government.
But they don't actually have any legal authority, do they? I mean, it's not a formal government agency. It's like a blue ribbon panel.
It's going to give recommendations, and we'll see what those recommendations, maybe they're going to be targeted at the Fed. We'll have to wait until, I believe, the mandate comes up for them in 2026. Now, a top corporate story this morning, Honda and Nissan signing a formal agreement for merger talks. The automaker saying a holding company will be created to house the new entity and should be listed by August 2026. Former Nissan CEO Carlos Ghosn telling Bloomberg's Manus Cranny the move reflects the panic mode at Nissan.
It's a desperate move. It's not a pragmatic deal because, frankly, the synergies between the two companies are difficult to find. There is practically no complementarity between the two companies. They are on the same markets. They have the same products. The brands are very, very similar. So in a certain way, from one side, Nissan, it's a desperate move to try to find the future.
Carlos Ghosn there, fantastic scoop by Manus on Friday. Bloomberg's Craig Trudell joins us now. Craig, is he right? Is this basically, a desperate move by Nissan?
I think there are some, minor points that you can make to quibble with Ghosn's argument. You can point to the idea that, Nissan, for example, is really lacking in hybrids, and Honda can maybe help them in that regard. But on the large, I think he's absolutely correct that these are two companies that are relatively strong in Japan, relatively strong in the U.S., but really struggling in China, have an ever shrinking presence in Europe. They have a lot of the same strengths, but also a lot of the same weaknesses. And so if you're Japan, you want to come up with some sort of means for, putting a floor under Nissan. But how do you go about doing that? There aren't a whole lot of attractive options to do that. And also, I think there's a sort of, bias toward it being a Japanese solution. And so hence we're seeing this, flawed deal, coming together, or at least the broad outlines of it coming together.
So what's been interesting, Craig, was that we heard that Hanhai, also known as Foxconn, was interested in investing or maybe buying Nissan. How does that fit in with this eventual Honda-Nissan merger?
I mean, it really looks like that's going to be sidelined at this point. I think there was real concern, it seems, in Japan about the prospects for that sort of a deal, because it maybe sort of led to an acceleration of Honda and Nissan's conversations that have been going back months. And I think there are perfectly legitimate reasons to be concerned, in the sense that Foxconn has been trying for years now to build up a presence within the auto industry. It hasn't really gained a whole lot of traction, so it's a very sort of untested player in this market. I also think that again, there's just a bias within Japan of, what, we want to protect Japanese interests, and if Honhai swoops in here, not only do they lack experience, but they're a Taiwanese company with significant presence in China. Do we want to see a national company as big as Nissan end up outside of Japanese hands? I think the answer within the Japanese government is going to be a resounding no to that.
Got it. All right, Craig, really appreciate your joining us. Craig Trudell covering autos for us for Bloomberg News in London. We want to shift gears now to oil, which is steadying, so to speak, after a weekly drop. Traders are weighing President-elect Donald Trump's threat to reimpose U.S. control over the Panama Canal. So joining us now is Amrita Sen of Energy Aspects. Amrita, we saw WTI drop 1.9% last week, and we're looking at Brent fall more than 2% last week. And, currently we've seen them on a little bit of a slide here. This latest comment from President-elect Trump about the Panama Canal charging exorbitant fees and wanting the U.S. to take that over. 2% of global oil supply passes through the Panama Canal. What does this kind of comment or this kind of instability for the region mean for oil prices?
I don't think it necessarily changes anything for oil prices overnight because, again, we have to actually see what gets done, right? There's a lot of talk right now across everything, be it tariffs, be it Iran, Russia, U.S. production. But yeah, I mean, of course, if trade were to be disrupted, and we have seen that, by the way, over the course of this year, there were droughts, significant droughts that resulted in lower flows through the canal for natural gas, for LPG. They are the two biggest ones that get affected, oil less so, but it just means that shippers will have to take the much longer route around Africa and to Asia essentially. So it's basically bullish for any shipping company, and it's bearish for U.S. LPG and gas prices. I don't necessarily think Trump wants that, right? But it does mean producers will have to discount the prices to accommodate for higher shipping rates because you have to take a longer route now.
Right. So it changes the cost input for a lot of the companies involved. When you look at crude overall, it's been trading a pretty narrow range since mid-October due to what a lot of people are calling lackluster demand and ample supply. When it comes to supply, is it simply ample, or is there a real risk that we're looking at a supply surplus that could persist for years on end?
No, I think that's the media narrative, the surplus that you just talked about. It's interesting that oil inventories across the board are actually very low. Oil pricing centers in particular, yes, we've seen some builds off late, but again, that's tied to kind of refinery downtime, which we see seasonally. And most importantly, OPEC has come out and very clearly stated they are going to delay the unwinding of the cuts to April, but also what they are, I think more importantly, what they have said is they're going to reduce the pace at which they bring back production over the course of kind of next year and through 2026. So that does take away the surplus for next year. I think now the market's shifted its focus. It was all about the surplus, but now it's shifting its focus to what Trump's going to do. And I think the belief in the market, rightly or wrongly, is that Trump wants low oil prices and he will get it no matter what.
Amrita, maybe there's no surplus right now, but there's a ton of spare capacity out there, isn't there?
Yes, and I think that's fair. And I think that's one of the biggest reasons why the market has struggled to rally, because ultimately, if spare capacity is high, by definition, even if you have low inventories, a lot of people will say that, oh, this is artificial. But what I do want to remind people is that where is that spare capacity, right? If the bulk of the spare capacity is in Saudi Arabia, a little bit in UAE, these are not countries that are going to necessarily put those barrels by cheating, etc. right? I think that is very, very important, that if the spare capacity is concentrated and in the hands of GCC members, then it very much depends on OPEC policy, OPEC plus policy, whether it actually comes to the market or not. Regardless, we actually think sanctions on Iran will tighten up next year under Trump, and that OPEC will be able to bring back some of that production, which then means that spare capacity will be coming down.
So you think the Trump administration is going to take a harder view when it comes to that enforcement on Iran? I also have reporting that the Biden administration on their way out may actually start to outright sanction Russian crude. What can that do for prices?
Yeah, that's an interesting one, right? Because we've seen the current administration, the Biden administration, basically turn a blind eye towards sanctions, including, I mean, Russia, the price cap was never really enforced, but also including Iran. We've heard from multiple refiners where the State Department has said to them, it's okay to buy sanctioned oil. They're not going to, come under scrutiny. But now I think they are trying to turn the heat back on. Elections are done. Oil prices are low. Look, Russian oil, we didn't lose any Russian oil because of sanctions. India and China are buying whatever wherever they can. We've only lost Russian oil because of OPEC plus policy. What I do think any direct sanction on Russia could do is tighten up a lot of availability in the East. We are already seeing lower Iranian availability in China, by the way, because of certain sanctions the Biden administration has come up with against Iran. So you're already seeing stronger demand for Middle Eastern crude, other crudes. So the Asian market is already tightening up, and anything they do on Russia will just make that significantly tighter, which ultimately just means higher oil prices.
So the expectation of that tightening might be driving hedge funds to take a more bullish view on oil. We see that hedge funds are becoming more bullish. Their net longs for WTI, for instance, rose the most in over 1 year. Amrita, how durable are these positions?
So this is the first time in a while, right? Like you say, hedge funds have actually turned bullish on oil. Throughout most of the year, they have been bearish. I think one thing we should not forget is that, yes, while we're talking about fundamentals, it is really the dollar, the yield, and also lower interest rates that are playing as big a part in determining oil prices these days. And what we have seen in our quant team, that it's actually the increased liquidity because of the Fed rate cuts that has allowed hedge funds to come back into this market long, just like they were cutting their long positions and went short when the Fed had started to raise interest rates. I think that's been a pretty big driver. And yes, ultimately, if our view is right that you're going to get tightening sanctions, then the market is going to be surprised. It's going to remain fairly balanced next year rather than being in surplus. And even though the hedge funds are along, by the way, the commercial speculators, which are basically the trading houses and a lot of the derivatives books in that kind of community, still hold a record short position. So there are still shorts to be covered. So I think hedge funds in some ways are probably ahead of the game a little bit. And if, again, January, February will be crucial to see whether we get the tightening of sanctions. If we do get it, then I think you will see some of these other shorts getting covered as well.
Okay, so we might see oil prices break out of their range that they've been stuck in since mid-October. It could very well happen. Amrita, thank you so much. Amrita Sen of Energy Aspects, really appreciate it. Let's get you an update on other stories elsewhere this morning and check in with Danny Berger for your Bloomberg Brief. Danny.
Hi, Scarlett. ECB President Christine Lagarde told the FT it is closer to reaching its 2% inflation target. She did warn, though, that they need to remain, quote, vigilant about services. Lagarde also expressed concern about trade frictions when President-elect Trump takes office, warning that retaliation is a bad approach that could harm the global economy. Donald Trump has named Stephen Moran to head his 3-member Council of Economic Advisors. Moran was a senior advisor at the Treasury Department during Trump's first administration. This summer, he co-authored a paper with Nouriel Roubini accusing the Biden administration of manipulating the economy via Treasury issuance. The Treasury rather vehemently denied those claims. NVIDIA reportedly plans to build an overseas headquarters in Taiwan. It favors Taipei City as its location, and it needs 3 hectares or 6 American football fields worth of land. CEO Jensen Huang had plans to increase investment in the country by building a large R&D center and hiring at least 1,000 engineers in the next 5 years. And that's your brief. Scarlett.
Thank you so much, Danny. Coming up next, traders are betting on more cuts from the Federal Reserve.
Most important thing for me was that we needed to recalibrate policy. Now I feel we've got that recalibration phase behind us, and we're in the next phase. And the next phase is really looking at the incoming information. We can return to a more typical pattern of gradualism for the Fed.
So we look ahead to the post-recalibration era. That's next. This is Bloomberg Surveillance.
about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States.
Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Keely Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Good morning. This is Bloomberg Surveillance, and we're looking at futures, equity futures, fairly steady this morning. We averted a government shutdown. Steady in this case means a drop of 0.1% for S&P futures, although NASDAQ futures are poking higher just by a hair. Euro-dollar continues to be under pressure, off 1/3%, just under 104. In fact, so far this year, the euro has lost almost 6% against the dollar. It's just weakness after weakness, Anne-Marie.
And next year, everyone's talking about potentially parity. How much more difficult is it going to get for the euro? Fighting against not only the growth prospects they're dealing with, political paralysis, and potentially the walls going up with the United States.
Yeah, and that's why everyone's flocking to U.S. assets, although not necessarily to treasuries, especially at the long end. The 10-year yield has been elevated, and a lot of people talking about 5%, perhaps 6%. Oil prices not doing a whole lot at the moment after a weekly decline. Now, under surveillance this morning, traders betting on more rate cuts from the Federal Reserve.
Most important thing for me was that we needed to recalibrate policy. Now I feel we've got that recalibration phase behind us, and we're in the next phase. And the next phase is really looking at the incoming information. We can return to a more typical pattern of gradualism for the Fed. We have to remain agile. I mean, the thing that's got us here is being resolute to achieve our dual mandate goals. We have a variety of risks that are the ones we always deal with. My projection is that it will take many fewer rate cuts next year than we thought, but I'll watch the economy and see if that works out.
And here's the latest. We had muted inflation data last week that reignited hopes of more rate cuts next year after the Fed trimmed its forecast for 2025 to 2 rate cuts in the year. Joining us now is Deborah Cunningham of Federated Hermes. Deborah, we heard Mary Daly, the San Francisco Fed president, talk about recalibration and this idea that perhaps they're past that and they have moved into a new phase. She mentioned the word gradualism, and Marie said maybe that's the next phase. We don't know. What does the Fed's next phase look like, whether it's called gradualism or anything else?
I think the gradualism is a good term, just simply because it's data dependent, and it seems as though the data dependency aspect of it is going to, sort of rule the day. And honestly, I think given where we are from an economic standpoint, given where we are from a political changeover standpoint, I think the question is out there from an economy standpoint. And, inflation, you see 2 numbers that are either higher or kind of on the screws with expectations. And then our most recent information on Friday was a little bit lower than had been expected. So, there's glimmers of hope and then glimmers of despair. So I feel like that dictates, sort of the gradualistic approach that Mary Daly was talking about.
So you mentioned gradualism dictating everything and, data dependency being paramount at this point. The Statement of Economic Projections that the Fed released last week tend to be more important, especially in a day where everyone had priced in a 25 basis point rate cut, which is what we got. One thing that surprised me was how there was no consistency at all in whether the projections reflect the incoming administration's policies, right? Jay Powell said, oh, some people did take a preliminary step. Others said they didn't. Others just didn't even specify. All of this seems really messy to me. Doesn't it make more sense for everyone to be on the same page? Why haven't they figured that part out?
Well, I do think it has to do with the inconsistency of what we're receiving on a daily basis from economic news. And certainly, if you looked at the information out into 26 and 27, it's a scattergram at this point. There is no consistency around where the voters are as to expectations for GDP, expectations for inflation, expectations for, where interest rates will end up. So I really do, allay it to the fact that the information that we're getting is not consistent, and depending upon who you are, whether you're a glass half empty, glass half full sort of person, you may interpret that data a little bit differently, which gives you all different expectations in the not near future, but I'll call the little bit longer term future.
Mohamed El-Arian this morning in the Financial Times, an opinion piece, said that the Fed's flip-flops risk undermining U.S. exceptionalism. Deborah, do you agree?
I wouldn't call it a flip-flop. I would call it being in tune with your markets, being in tune with the economy. So no, I don't agree. I think that the Fed would like to be consistent and always follow its, sort of pre-assigned path or, what its expectations are. But if the information, they rely on a feedback loop. And if that feedback loop is providing with them with something different than what their expectations are, then I think they have to alter their plans. So being, I guess, responsive to the information that they're getting is more like what I would call it rather than, doing some sort of a flip-flop.
Deborah Cunningham, thank you so much for your time this week. Merry Christmas and happy holidays to you and your family. That's Deborah Cunningham of Federated Hermes. Scarlett, though, it's interesting because some members of the Fed said they were calibrating what next year might mean for Trump's policies, and others said, no, we're just looking at the data right now.
Yeah, and it really raises questions on whether they're all on the same page and how they're thinking about policy. I mean, it's notable that the last Fed meeting featured one dissent, right, from Beth Hammack, the incoming Fed president. It's going to reinvigorate the debate. It's going to make for a much different debate as well in 2025.
And she put out a statement saying that actually it's individuals in her district, the lower income individuals that are dealing with higher inflation, why she wanted to put that dissent out there. Coming up another hour, surveillance with Scarlett and I, Sarah Kunst of Clio Capital, Terry Haynes of Pangea Policy, and Tom Steyer of Galvanized Climate Solutions, and of course, Clint Henderson, the man you want to talk to this week if you're traveling from the Point Sky. You're watching Bloomberg Surveillance. Good morning.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
What prompted you to want to get out of just doing surgery to be an administrator and a hospital leader?
Watching others who did it well. I had a dean who recruited me from Birmingham, Alabama to Minneapolis, Minnesota, which is a big jump to convince me to move my family. I realized over time that my training as a surgeon brought a set of credible things to the table. One, if surgeons have a measure of emotional intelligence, not much of our training reinforces that. It reinforces skill, not necessarily emotional intelligence. But if a surgeon has some self-awareness and emotional intelligence, what they bring to the table of leadership are three fundamental things. Number one, they do everything in teams. Their operations, their patients they see is all team focused. Number two, they value process but they hold themselves very much accountable to execution. They understand that it's good to explore a patient, but what really matters is that you take the tumor out. And then number three, they make difficult decisions on incomplete information. Those things I realized that I could bring to the table as a leader if I had a sort of a passion for working with people and had some sense of self-awareness.
The countdown is on. Everything you need to get the edge at the end of the market day.
Big tech earnings kick off later this afternoon.
Gilead is coming out right now.
We have take two numbers. Back to the markets, right? Our bread and butter.
NVIDIA is one of the best stories in the tech space.
That actually matters a whole lot more.
It might shock some of your viewers.
You're watching The Close.
Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
There is this real momentum from Wall Street.
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia. We'll walk you through what you need to know to kickstart the European trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We've seen just such a frothy market over the last month.
I don't think the bull cases have gone away.
As the market broadens out, what that means is that the former winners are going to start to decline a bit.
Everyone's got a lot of uncertainty at the moment. The next couple of weeks we think are going to get a little choppy.
This is Bloomberg Surveillance with Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern.
Welcome to the final week of 2024 from New York City for our audience worldwide. Good morning, happy holidays, Merry Christmas. This is Bloomberg Surveillance. Alongside Scarlet Food today, I'm Anne-Marie Hordern. Scarlet, keeping us company, Jonathan and Lisa have started their holidays early, left me here to hold down the fort with Scarlet. What we're seeing really is no action. It's Christmas week, but what a year it's been. S&P 500 up some 20%. And now, looking into next year, the questions on the horizon about the Fed and about policy. I love what Stuart Kaiser put out yesterday, Scarlett. He talked about positioning and policy risks, drove a 120-minute sell-off to define the week. How many more of those potential 120-minute sell-offs can we see in 2025?
That's a really good point. The 120-minute sell-off was violent. It was stark. It was deep. It was big. But the days where we recover are kind of forgotten, right? I mean, it's just a slow melt up. And the slow melt up has resulted in prices that have priced in great scenarios for everything, where most investors are giving the president-elect all the benefit of the doubt and not really thinking through perhaps the ways in which things can fall apart. We almost had a shutdown last week, but it was averted.
We almost had a shutdown. Third time's a try to get that deal through. Actually, I was in D.C. Federal agencies start to take all the precautionary measures they need to take in order for those shutdowns. Can you imagine what a shutdown would have meant into January around the holidays for the FAA? Things like TSA, they do get paid but delayed. So what ends up happening is a lot of these workers start calling out sick.
Yeah, and especially during the busiest travel week of the year. I know we're going to speak with Clinton Henderson of The Points Guy a little bit later on about what that would have looked like. Fortunately, we'll just deal with the usual holiday travel mess.
Right, and if you're traveling this morning, very good luck to you. I did it over the weekend. It's not exactly always that much fun. This morning, as Scarlett and I have been saying, S&P 5 futures are flat. The S&P 500 last week closed down on the week. It was a tumultuous week when it came to trading because of the Fed, because of PCE. Coming up this hour, Sarah Kunst of Clio Capital, as stocks come off their worst week since mid-November. Terry Haynes of Pangea Policy as President-elect Trump addresses Elon Musk's growing influence, and Clinton Henderson, as Scarlett said, of The Points Guy on the state of holiday travel. We begin this hour with stocks higher. The S&P 500, actually they're a little bit lower. S&P 500, NASDAQ pairing Fed-induced losses on the back of subdued inflation data. Sarah Kunst of Clio Capital anticipating a big year for deal making, saying we're in a market that has done well over the last year and people have plenty of cash on the sidelines. IPOs are going to happen. M&A activity is also likely to pick up even faster with a defanged FTC and SEC. So look at Mag 7 to take their seemingly endless piles of cash and go on a shopping spree. Sarah joins us now. Sarah, thank you so much for joining us this holiday week. So where do you think they should go shopping?
I think that AI is going to be one of the top places that they're looking on their shopping list, because the reality is, and we've already started to see this with Microsoft, a lot of AI startups have been funded in the last couple of years, and what people are quickly realizing is, wow, it is expensive to keep funding them, to keep scaling them. And these big companies, they need the win. They need that innovation. So I think that you're going to see a lot of tie-ups there that just haven't been possible over the last couple of years, because it has been a really sort of anti-M&A environment.
So how much of this is driven by change of leadership in Washington, D.C.?
I think that certainly some of it is. Some of these companies were going to need to go out anyway. When you look at the IPO market, you see companies that in that sort of dip in 21, 22, they raised capital on terms that had covenants that said, hey, you really need to go IPO quickly because we are going to make it very painful for you if you don't. I think ServiceNow had some of those. They just went out, seems to be doing, okay. And so I think that we're going to see companies that had to IPO anyway, and now they're sort of, hey, it's not the right time, we're not going to get great returns for you, kind of, feedback to their investors isn't going to hold as much water, because we do have a new administration coming in that has indicated that they're going to be a lot friendlier to IPOs and a lot less hands-on on the regulatory.
I think about how last year at this time, investors were waiting on some prominent companies to go public, Sarah, notably Reddit. And of course, Reddit did go public in March and has had a tremendous run. Are there any big names on deck for 2025 that people are anticipating with the same excitement that they were for Reddit?
Look, people have been anticipating Stripe to go public, and that might continue. We might have to keep anticipating, but that's certainly been names that people have been salivating over for a while now. I think Klarna is going to be another relatively bright spot. You have to remember that these companies have already massively repriced themselves down because they were raising in the private markets at valuations that were just totally out of whack with what their public market counterparts were getting. And during that downturn in 22, a lot of them had to do some really hard internal private repricing, which makes them a better target to go public because they're not sort of so unaligned with their public market comps anymore. And of course, the $500 billion elephant in the room is SpaceX. Will we see some sort of public market transaction there? Probably not the whole company, but potentially with parts of it. Elon always needs more cash. And so, there are some really big names that people in the private markets are betting on to go public soon. And those are some of the same big names that people have been betting on to go public in the private markets for a couple years now. So we just don't know until they file.
I love that. The headline of the hour, Elon always needs more cash. Sarah, you talk about cybersecurity being a big theme for you in 2025. In what way? As companies that will IPO or as targets of M&A?
I think that we're going to see a lot of activity everywhere. The internet is getting basically unusable for people. I use a bank where I literally can't send wires. I have to call them to get wires sent. And this is a huge wealth manager in the US because there's so much fraud that they say, look, it's just better if you don't touch it. That's not a way to live. That's not sustainable. And so what I think we're going to start to see is a lot more consumer companies focused on cybersecurity. That's an area that historically everybody said consumers won't pay to stay safe on the internet. But, you kind of have to at this point because everyone's losing money to scams constantly, and there has to be some sort of recourse. And so I think across consumer, across defense, even infrastructure, we're just going to see a lot more. At the really early stage, Clio Capital, my fund, we actually launched a cybersecurity accelerator because we want to put our flag in the ground and say, look, startups, you don't have to just build for enterprise. You can build, across the spectrum, because everybody deserves to be able to go on the internet and use it and not immediately get scammed. And we know when Bitcoin goes up, when crypto goes up, we tend to see even more scams because that ransomware money is a lot more lucrative. You have entire countries that are funding huge swaths of their nuclear programs with ransomed Bitcoin. And so I think that cybersecurity is going to be really big. The names that we know, like Palo Alto Networks, I mean, they knocked the entire internet offline and they're still doing relatively well because people need their products. And so I don't think that that's going to go away next year.
Right. That's a good point. I mean, the big cybersecurity companies have all taken a few knocks, yet people still see blue skies ahead for them. What kinds of companies will they be looking to buy versus those that maybe they would form partnerships with? How are you thinking about that?
Yeah, I think when it comes to the M&A piece of it, they're going to be looking for ways to get a lot of times just new customers. What you need to do to have good cybersecurity starts to get into what you need to do to never, ever, ever use your computer, right? If you have 25, character unique passwords for every service that you sign into and you change them every quarter or every month like you should, you never have any time to get anything done on the internet. And so I think that there's going to be a push for how do we make cybersecurity sustainable, usable, workable? Most failures happen because an individual decides, hey, I don't need a password, I won't lose my laptop, whatever it is. These are human factors. And so how do you sort of make it easier for the average human, for you and I, to not, accidentally expose our company or our bank account or a social security number, to these bad actors? And so I think that companies that really understand the consumer side of it are going to be incredibly attractive to these companies because we have this sort of encryption technology. We know how to keep things safe. The problem is it's really, really hard to keep things safe when it creates such a huge onerous burden on the end user that we all end up throwing up our hands and saying, hey, whatever, password's probably a perfectly good password.
Sarah, how much of this is also a concern for the U.S. government, especially when it comes to state actors?
I mean, the U.S. government has come out and said, hey, don't use SMS, right? And you're like, no, but that's a text message. Yes, that they're saying it needs to be encrypted end to end. You need to look at services like iMessage, like Signal. Sending an SMS is broadly, with the recent Chinese attacks on sort of everything, you have to assume that your texts aren't safe. And so it's certainly, a defense problem. Both in the sense of just governments that spend a lot of time and effort, hacking and a lot of the big sort of, hey, you get a pig butchering scam message from somebody hits you up on a dating app who's maybe a little too cute for you and all of a sudden wants, you to help them trade crypto. A lot of that kind of stuff is coming from government actors, and they're using that to make up for sanctions or wherever else they don't have cash. And so this is a problem across everything you could think of. When you're home over the holidays this year, look around at your aunts and uncles, your grandparents, ask them if they know anybody who's gotten scammed. And you see how many 70 and 80-year-olds in America are getting scammed and know people who are, you realize this is a gigantic problem.
So IPOs, cybersecurity, what else are you looking for 2025?
I think that we're also going to see a lot of money going back into startups. Not that it's slowed exactly. We've certainly had a huge amount of that happening in AI. But when you look over the rest of the broad startup market, there's been a slowdown because, investors, big venture funds haven't had those returns coming back. So as those returns come back, and also a lot of venture funds now do hold different crypto, different tokens, Bitcoin. So as those asset classes heat up, I think what you're going to see is a lot more money going back into startups. And so, later stage startups, the Series B and C, I think are going to be really, really hot. I think that we're also going to see a little bit of uncertainty at the beginning of the year until the tariff situation gets straightened out. But once people have a sense of what's going to happen there, I think anything that's not directly impacted by any tariffs, you're also going to see a lot of growth. I think that the AI trades, particularly in the Broadcoms and Intels of the world, are far from over, those legacy tech names in the public markets. And so I think it's going to be more of the same, but it might feel even faster paced and more like the last few weeks and the last few years, just given the fact that there's probably going to be a lot more money coming off the sidelines and into investing.
Sarah Kunst of Clio Capital, thank you so much for joining us. Merry Christmas, happy holidays to you and your family. You know what else is going to be a theme for next year, potentially? I think we're seeing it already, consolidation in the auto sector.
Absolutely. Nissan Honda signing the basic outline of a merger agreement where things will really get going by January of 2026. You can see Honda's ADR is moving up by 16%. I was just looking at some old stories, and it was interesting to see that Nissan officials, unnamed Nissan officials, were saying in late November that they have 12 to 14 months to survive. So they were kind of on the prowl already, looking for some kind of white knight, a savior.
Absolutely. And Nissan's former boss, Carlos Ghosn, talking about how really this is just survival mode, last-ditch effort to try to survive for Nissan. We'll have more on that story. We're also getting an update on other stories we're watching this morning. Here's your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, Anne-Marie. Alleged United Healthcare CEO shooter Luigi Mangione arrived back in Manhattan after being flown in from Pennsylvania by the NYPD. Mangione was escorted by a group of officers accompanied by Mayor Eric Adams. He's currently being held at a detention center in Brooklyn, and he's set to appear in court later today for his arraignment on state murder charges. He's also been indicted on federal charges, including first-degree murder, which could make him eligible for the death penalty. Xerox announced it will buy Lexmark in a deal valued at $1.5 billion, including debt. The acquisition would return Lexmark to U.S. ownership, and it would help Xerox with global expansion as it struggles with sales. Xerox expects the deal to close in the second half of next year. It says that Lexmark would immediately add to its EPS and free cash flow. And at the box office, Paramount's Sonic 3 took first place in the weekend, netting $62 million in North America. The popular video game franchise easily beat out Disney's Lion King prequel, Mufasa. It earned $35 million. Wicked, that hovered in third place with a total haul of $384 million in the domestic box office after 5 weeks. And that's your brief, Anne-Marie.
Thank you so much, Danny. Scarlett, have you seen any of those movies?
No, I did see Carry On, which was on Netflix, so it was a little bit of a waste of time, but, you know, interesting enough.
I saw Gladiator 2. To be honest, the original was better.
Yeah, well, the original is kind of untouchable.
Yeah, and there were sharks, you know, in the Coliseum, which just, for me, is so unrealistic.
It's a bridge too far. Everything else was realistic,
yeah,
but the sharks...
not really, but yeah, it was a bridge too far. All right, up next, setting the record straight.
All the different hoaxes, and the new one is President Trump has ceded the presidency to Elon Musk. No, that's not happening.
President-elect Musk, not happening, according to President-elect Trump. You're watching Bloomberg Surveillance.
We spent some time here on the broader presidential race.
Let's focus in on European politics.
Makes you wonder how politics might play out. From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
This is Bloomberg Technology.
This is the Asia Trade.
You're watching The Close. Welcome to Balance of Power.
This is Bloomberg.
Good morning. Under surveillance this morning, setting the record straight.
All the different hoaxes, and the new one is President Trump has ceded the presidency to Elon Musk. No, that's not happening. But Elon's done an amazing job. Isn't it nice to have smart people that we can rely on?
Here's the latest. President-elect Donald Trump addressing concerns about Elon Musk's influence in his administration, adding the Tesla CEO cannot be president because he wasn't born in the United States. Terry Haynes of Pangea Policy writing Musk has emerged as a liability to Trump in at least 3 ways, U.S., UK, and Germany, that imperil Trump's economic and geopolitical actions. Terry joins us now. Terry, thank you for taking time out of your morning this holiday week to join us. So how much of a liability do you really think Trump is right now? And potentially, is he overstaying his welcome? Is this getting to President-elect Trump?
Well, I think, Anne-Marie, that it's a matter of what he does, how he does it, and how visible he is. And, Musk getting way over his skis on a whole bunch of things is bad for Trump. One of the things that Trump does quite often is, gives people rope and sometimes gives them too much rope, and then has to reel them in, and has to clean up the mess after them. I think that's largely what's happened with Musk. As much as he came out late last week and made federal spending much more difficult to come by, he disappeared rather quickly. And so I think it's a matter of kind of calibrating how and where he's going to be most effective. But I do expect him to continue to be around for a while.
Let's talk about the shutdown debacle, because we could have been having a Monday morning right now with the government shutting down. We were on that trajectory. What episode did that tell you basically over how Trump is going to deal with Republicans in Congress, especially the House?
Well, he's got a job to do in putting the toothpaste back in the tube, and it probably won't be perfect and maybe not done at all. The last thing Trump needed was such small Republican majorities is the kind of incident that happened last week, and yet it happened. So he's going to have to spend more time making it up to Congress rather than Congress making it up to him. You can't be in a situation where you're treating a co-equal branch of government. That's what Congress is, and more importantly, that's what they think of themselves as. You're treating them as if they can turn on a dime, do 180s on policy positions that many of your own party have been taking for 20, 30, 40 years. And when you don't get that fealty, threaten to run them out of office. That's going to be a job, that's going to be quite a cleanup job, and it's going to involve the president personally. It's going to take a little while. Meanwhile, it's going to delay all kinds of things, from how to deal with the debt ceiling to the tax bill itself.
So I want to go to that idea that there was a small handful of Republicans in the House who defied the president-elect. 38 Republicans who voted against Mike Johnson's Plan B funding bill that was backed by the president-elect before moving on to Plan C. What does that portend for how the House will or will not comply with what the president-elect is seeking?
Well, two things, Scarlett. First is that if you've got 38 members of your own party that are willing to defy you without any compunction, I mean, they just, went right ahead and did it. You have, twice as many, 3 times as many, 4 times as many who actually think what they expressed. So that's one reason why I say that it's much more difficult. It's a much more difficult situation than may be apparent just by the votes. Secondly, after all this, I continue to say that I think the tax bill is about 80% likely today, although that's volatile. The reason why is very simple. Congress wants the tax bill, and Congress gets to write the tax bill. Just like in 2017, Trump doesn't get to write the tax bill. Congress gets to set the parameters and deal with the specifics. And Trump's influence is limited to, frankly, some things he might want in the bill, some things he might not want in the bill. And, whether those things are doable or not, frankly, is much more up to Congress. And they will be marginally more willing to defy him on many of those things, whatever they might be down the road. But the tax bill is going to take a while, and it just took a little bit longer thanks to what Musk did last week.
Yeah, well, speaking of the damage that Musk might have done to the president-elect's agenda, you mentioned that Musk has been a drag on U.S.-UK relations. How much time does Trump or his team need to spend to kind of clean up the mess here as Elon Musk puts the U.S. in an uncomfortable position?
I'm not sure I've seen a situation where the relationship between allies, particularly between the United States and another one of its serious allies, has been upended and shaken quite as much as the U.S.-UK relationship has been over the last week. That's happened on both sides of the pond, by the way. Musk offering to back Farage's Reform Party to the tune of 78 million pounds, I think it is an indication that Trump himself thinks that the existing political parties in the UK that he has to deal with are somehow not worthy of being dealt with. And so that's a problem. But, on the other hand, the UK Prime Minister Starmer's made a bunch of messes here, too. Firstly, sending Lord Mandelson to Washington when Mandelson is well known to loathe Trump and Trump loathe Mandelson is a bad sign for the U.S.-UK relationship. And then Starmer also seems to be, and Mandelson seem to be outsourcing policy to some extent to Farage by Mandelson saying that Farage can be brought in order to help with Trump. So the UK has now got a situation where it might have dueling ambassadors in Washington. Mandelson living in the mansion, but Farage actually being the conduit to Trump. This all around is an untenable situation, but it's going to take a while to shake out.
Yeah, it sounds like it's pretty messy diplomacy in the meantime. So, Terry, it's the last week of 2024. It's a holiday week. We presume things will be quiet, but this is Trump world we're talking about here. What's a headline that you're going to be anticipating or bracing yourself for this week?
Well, not so much bracing, but, a lot of what, let me run a thread through a lot of things that you and Anne-Marie have talked about this morning. What do the Panama Canal, Greenland, Canada, and the Honda-Nissan tie-up all have in common? I would tell you what that has to do is U.S. defense and U.S. national security. In Trump's kind of, sometimes clumsy way, what we're talking about here is a situation where, he's very interested in drawing a United States defense perimeter, both in the Atlantic and the Pacific, since the canal goes through the Pacific. And the Nissan-Honda deal is only the latest of the indications that the West is going to have to fight back against China's desire to dominate sectors and subsidize.
Good point, Terry. Thank you so much for your time. Merry Christmas, happy holidays to you and your family. Terry Haynes at Pangea Policy. Coming up next, Tom Steyer of Galvanized Climate Solutions. This is Bloomberg Surveillance. Good morning.
It's the world's second largest economy with a growing influence in global affairs. But geopolitical uncertainties, deflationary pressures, and questions about foreign investment linger. Bloomberg, the China Show, brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China. Bloomberg, the China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. Bloomberg covers the world with unmatched reach and resources. From more than 120 countries, the moment news breaks, 24 hours a day. Bloomberg, context changes everything. Welcome to the world of decentralized finance.
Massive outperformance from Bitcoin.
Bloomberg's covering all things crypto, the people.
The tectonic shift emanating from Washington.
All we're looking for is clear rules and an ability to build in the United States. Crypto shouldn't be partisan.
The transactions.
Really a record-breaking moment.
Crypto VC is back.
And the technology.
It's really the beginning of a global on-chain economy.
And if America doesn't embrace it, we're going to be left behind.
Bloomberg Crypto, only on Bloomberg.
Good morning. This is Bloomberg Surveillance. I'm Scarlett Fu with Anne-Marie Hordern. John Farrow and Lisa Abramowitz are taking a much-deserved break for the holidays. Let's get you an update on where things stand right now, because after 2 straight weeks of losses, the S&P 500 right now indicated to move higher at the open, but it's early days, and this is a modest gain here. NASDAQ futures also higher by 0.4%. Small caps under pressure. There are some catalysts later on today. We've got Chicago Fed activity and durable goods at 8:30, building permits before that, and new home sales at 10 a.m. Treasuries. Anne-Marie, you reminded me, there's going to be a debt auction today.
There is going to be a debt auction today. Yeah, that's right. So we have at 1 p.m. 2-year bond auction. This is what Lisa would start the show with. So, you know, in homage to her, we have to talk about what's going on. But of course, Treasuries this morning, I mean, really no drama here because there was no government shutdown.
There was no government shutdown. That was averted.
We could have had a very different Monday morning.
Yeah, but you know, yields continue to move up, and that's been the story for a while now, right? On the long end, yields have been steadily rising over the last 2 weeks. A lot of talk about 5%, maybe even 6% in 2025.
At some point, if we were to see a 10-year yield at 5%, 6% if potentially what you're saying becomes true, how much is that going to push back on some of the potential fiscal policies that the incoming Trump administration want to do when it comes to things like tax bills?
Yeah, well, it's definitely going to increase our interest management expenses, so that's a big part of it. Just a quick glance at euro dollar as well. Euro under pressure versus the U.S. currency. The dollar has been on a tear, up 7% so far this year when you look at the Bloomberg Dollar Index. And again, we continue to see the euro weakening, and a lot of talk about parity perhaps being next, but clearly the euro, a direct victim of this threat by President-elect Trump to impose tariffs on the EU for this time not buying enough U.S. oil or natural gas.
Right, that's the latest one. But what's interesting is that right after Trump won, Ursula von der Leyen came out and said she had a phone call with President-elect Trump and said, maybe we will just buy some more LNG. The U.S. is already shipping tons of LNG to Europe, but they are also still buying LNG from Russia. So potentially more LNG from the United States could go to Europe. That is how Trump is going to try to enact deals. It's going to be very transactional. White House.
We've seen it before, and we'll see it again for this second go-round. All right, we are 2 hours away from the start of U.S. trading. Let's get to your morning movers now with Danny Berger. Danny.
Hey, Scarlett. As he tends to do, Warren Buffett moving some equities this morning. On Friday, we learned of some purchases that Berkshire Hathaway had made, the most surprising of which was probably Occidental. So these shares rallied on Friday. It's happening again today, up more than 2.5%. Why surprising? He's sitting on a paper loss on this equity since he started buying shares of it 2 years ago. Now he owns nearly a third of the company, maybe a sign, and at least the market's taking it as such, that he is more confident in leadership. Meanwhile, Eli Lilly also rallying this morning, also off the back of late Friday news. They have one FDA approval for their